This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news. Tensions between the U.S. and China have heated up even more. The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube as well, so head over to youtube.com, search Bloomberg Podcast. That's where you'll find us. David Gura, he's sitting in for Tom Keene here today, so we are in a good shape. Coming up, we're going to get the latest from the Middle East. Joumanna Bercetche, Bloomberg television anchor. She's based in Dubai. She'll give us the latest on what's happening in Syria and that part of the world. Cole Smead, Smead Capital Management. He's going to be in our studio, get his thoughts about where he's positioning for 2025. Seema Shah, Chief Global Strategist for Principal Asset Management, on the implications of U.S. tariff policy and how she sees that impacting the markets. Newspapers, 745. Lisa Mateo, boom, we're doing it here. That's no problem. Bloomberg Surveillance today brought to you by Oppenheimer. Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Call an Oppenheimer professional today. Let's check in with Lisa Mateo and get a Bloomberg Business Flash. Lisa.
You got it. And we've got futures kind of struggling for direction. Political turmoil in the Middle East, South Korea offsets some optimism over China's monetary policy shift. So let's get to it. We have NASDAQ futures down about 0.1%, 39 points. Dow futures, little change, up about 20. S&P futures down about 4. We have the 2-year yield, 4.10%. That's little change. The yield on the 10-year, 4.17%, and that's up 1 basis point. Korean markets extending their declines. Opposition lawmakers pushing for another impeachment vote on President Yoon Suk-yeol. Right now, we have the Kospi down more than 2.5%. The Korean won down 0.6%. The Chinese yuan right now up about 0.1%. So erase some losses. China's top leaders announced they're embracing a moderately loose strategy next year. U.S.-listed Chinese shares, those are on the rise. We cover it. That's following from that strong close for Hong Kong's benchmark. Alibaba up 6%. You have PDD up 10%. JD.com up 8%. And let's get to those NVIDIA shares. They're lower. They're down nearly 2%. A report that China probing the company on suspicion of anti-monopoly law breaches. And finally, big deal-making news. The deal could create the world's largest advertising company. Sources telling the Wall Street Journal, Omnicom Group advanced talks to acquire Interpublic Group, which has shares of Interpublic. That's up about 11%. Omnicom is down about 5%. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. Some more geopolitical news over the weekend coming out of the Middle East, David. And with Syria, Bashar al-Assad has fled to Moscow after rebels advanced on Damascus, marking the end of his 13-year rule in Syria. What does it mean for Syria? What does it mean for the Middle East? Joumanna Bercetche joins us. She's the anchor for Bloomberg Television. Joumanna, can you put into context for our listeners, our viewers here, what is happening in Syria?
Yeah, it's truly unbelievable scenes. You mentioned 13 years. Obviously, that is 13 years since the beginning of the civil war. But the Assad dynasty, and here I'm talking about the father, Hafez al-Assad, his son, Bashar al-Assad, who took over early 2000s. They've been around since 1970. So if you think about it, most people alive today do not know a Middle East that did not have the Assad regime at the helm of Syria. And of course, they ruled with a very a heavy thumb. It was essentially a totalitarian dictatorship. They were the only political party that was allowed. Political dissent was not allowed. And now you're seeing these images of jubilation from Syrians inside and outside Syria, really celebrating the end of what is known as, and what was, a very brutal regime that imprisoned many prisoners for political reasons, and really pursued a government of oppression and repression. So On one side, there are lots of scenes of jubilation. Now, on the other side, of course, this is the Middle East. And the big question here is what happened next in terms of who takes over, but also in terms of all of the countries that had a vested interest for whatever reason. And here I'm talking about the likes of Iran, about Russia, about Turkey, about Israel, about all of the countries neighboring Syria that have a vested interest in what happens next with this country.
Well, let's talk a little bit about that. And you bring up the dynamic involving Turkey. I think about who the U.S. has backed in this conflict as well.
Yeah.
And I wonder how you see this playing out. A lot of people are bringing up what happened in Iraq, for instance, or Libya after the deposition of those leaders there. How much is that a good analogy as you see it? And sort of how might this play out going forward? This is a country with a lot of disparate groups, and I think hopes for democracy might be waning here as we watch all of this come together.
So you're going to hear a lot about a guy called Mohammed al-Jolani, that is the leader of the rebel group, the main rebel group, HTS, Hayat Tahrir Sham, who were leading the offense into Damascus the last couple of days. And one thing to note about him is he sort of rebranded himself. He's actually changed back to his normal name, Ahmed al-Shara. That's the name that he wants to be known by, but also is trying to rebrand the group, the militia group itself. It obviously has its foundations with Al-Qaeda. What he's been trying to do over the last couple of months is distance himself and the group from any Al-Qaeda affiliations. Is, by the way, very important to mention, they're still labeled a terrorist organization by the US and other countries as well. This is the HTS, the main group that just toppled Assad. And so, yes, there is a lot of consternation about what this group is actually going to do. But then the second element to note is it was actually quite peaceful. So they stormed into all of these cities, but not a lot of damage was wreaked. There wasn't a lot of bloodshed. There wasn't a lot of exchange or battles or exchange of fire on the battlegrounds. And actually, in the end, Assad just fled to Russia, per Russian state media. And so the handover so far has been somewhat of a peaceful transition, but it's what they do with that power and whether or not this one group, HTS, is going to manage to get the support of all of these other rebel forces that happen to be present in the country. You mentioned ISIS as well. Very small representation there, but still, if these small extremist groups see a window of opportunity or a vacuum, I think that will be the major concern for the likes of the US, obviously, who've been pursuing an anti-ISIS policy in the region for over a decade now.
So, Joumanna, what do folks in that part of the world think the U.S. response will be, should be, under President Biden, under President-elect Trump? Is there an expectation of that the U.S. will play some role going forward?
We were speaking to some analysts on the show earlier today, and they all had the same view, which is that the U.S. or President Trump himself, given his post over the weekend, may not want to be involved in Syria, but unfortunately for him, he will have to be involved in Syria simply because of its strategic importance and because of all the players that we listed are involved in Syria. As for the U.S. troops, there are about 900 troops positioned in the northeastern part of Syria. That is the Turkish enclave. And they're stationed there because, again, that is where they have been fighting some of these ISIS forces. So that group, the Free Syrian Army, as they know, the Kurdish group, are closely aligned to the U.S. Enter President Erdogan from Turkey. His concern is the number of refugees that have been flooding into Turkey since the beginning of the Syrian civil war. It's more than 3.5 million. The political point is closely watching what is happening with the Kurdish enclave on the border, does not want to see that region become an autonomous breakaway region like what happened in Iraq. And so the reason I bring this all up is there are going to be a lot of discussions, negotiations going on vis-a-vis the future of Syria, not just in terms of Damascus and governance, but also these other regions as well, which for Turkey are very important.
I want to ask you lastly just about a column that John Authers, our colleague, wrote this morning. I thought it was fascinating, and I think a question a lot of listeners will be asking is, how does this affect me? Why is this so important? I look at Syria. It's not an oil-producing nation, for instance. And he writes it could be a great litmus on the state of Russia today and the power that Russia has and President Putin has in particular. And so you talked about kind of the 13-year civil war. This lasted a long time until it didn't. Things really accelerated here over these last 2 weeks. But it might point to some weakness on the part of Russia, of Iran as well. And I wonder if you could just talk a bit about that, kind of the broader geopolitical implications of this and sort of what it might tell us about these proxy governments who've been involved in this fight for so long?
Yeah. So one thing I want to bring up is the rebels actually started their offense the day Lebanon and Israel signed a ceasefire. I don't know if that was a coincidence, but still, they sensed the window of opportunity there. And I think the analysis in the region suggests that what is trying to be done here is to effectively block off the corridor that was Syria, that allowed for the transport of weapons from Iran into Iran's ally, the militia Hezbollah in Lebanon. And Syria was seen as a key corridor. So number one is they want to limit the amount of arms and weapons and fighters that have been transported through Syria over the last few years, even drugs, by the way. There's a big narco trade that people don't really talk about. The second thing is chemical weapons. Today, there were some reports suggesting that the IDF had targeted a chemical weapons facility within Syria. So you want to keep an eye on that and dismantling Syria's full chemical weapon warehouses. And then the third point, what you were saying about Russia, they do still have a couple of bases, an air base and a naval base on the Syrian port, but it's less relevant for them. And likely what people are saying is they're going to use the Syria negotiating point as a tactic to get more concessions on the Ukraine discussions. And of course, they've been embroiled in the war there for several years now.
All right, Joumanna, thank you so much for joining us. Joumanna Bercetche, great reporting there. She's anchor for Bloomberg Television. She's based in Abu Dhabi, giving us the latest coming out of Syria with our news in New York City. Here's Michael Barr.
Thank you very much, Paul, David, and Lisa. Russia media says ousted Syrian leader Bashar al-Assad has fled to Moscow and received asylum from his longtime ally. It comes hours after a stunning rebel advance swept into Damascus to cheers and ended the Assad family's 50 years of iron rule. President Biden reacted to the rebels toppling Assad's regime.
The fall of the regime is a fundamental act of justice. It's a moment of historic opportunity.
Meanwhile, Syrian rebels freed prisoners from Assad's notorious dungeons. President-elect Donald Trump gave his first network TV interview since his election win. Trump says one of his first days in the priority of taking the office will be issuing pardons to the Capitol rioters on January 6, 2021.
I'm going to look at everything. We're going to look at individual cases, yeah.
Okay.
But I'm going to be acting very quickly.
Trump spoke on NBC's Meet the Press here at Sundays on Bloomberg. Touching down in Japan a day earlier, Defense Secretary Lloyd Austin marked the close of his time leading the nation's military with a visit to the USS George Washington, stationed in Yokosuka today. In his 13th visit to the Indo-Pacific, Austin reminded the men and women under his command to represent their country well while stationed there.
In many cases, our allies here in Japan will never get to go to the United States. They will only know the United States of America through their relationship with you.
The naval aircraft carrier is the only forward-deployed vessel in the ocean at this time. Finally, huge baseball news. Media outlets are reporting that star outfielder Juan Soto and the Mets have agreed to a record $765 million 15-year contract. Man, global news, 24 hours a day, and whenever you want it with Bloomberg News Now. Just call me Bat Boy. This is Bloomberg. Paul, David, and Lisa.
I mean, Michael Barr, I guess the business of sports here, if you're the Dodgers, if you're the Mets, if you're the Yankees, maybe one or two other teams, you can afford to play in this game. Nobody else can, it seems like.
Yeah, and I'm wondering, when can we get to a cap? And I see that happening one day.
I guess. I mean, but it just seems, we've seen what the LA Dodgers have done over the last several weeks, just stockpiling these amazing high-priced talent. Now the Mets here with Soto, and again, you never discount the Yankees or I guess even the Red Sox. I'll throw that in there for Tom Keene, but how about everybody else in the world?
That's why the Tigers really impressed me this year.
Teed him up beautifully for that.
Yes, I did. Exactly. All right, we'll see how that plays out, but good for Mr. Soto, good for Mets fans out there. Tickets in Queens, I'm sure they're going to be going higher to help pay for all this. We're going to have more coming up. S&P minus 3 points. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in futures, and this is after stocks extended their record-breaking run on Friday following jobs data that increased bets on a December rate cut from the Fed. We'll head over to the NASDAQ futures, down about 0.1%, 35 points. Dow futures, little change, down 4. S&P futures down 4 as well. The 2-year yield, 4.10%. That's little change. The yield on the 10-year, 4.16%, and that is little change. To commodities, oil rose after the toppling of President Bashar al-Assad's regime. We have Brent crude up more than 1% at $71 a barrel. WTI crude at $68 a barrel. Spot gold up nearly 1% at $2,657 an ounce, and the Bloomberg Dollar Spot Index is little changed. We get more inflation data due out this week. The November Consumer Price Index Wednesday, producer prices Thursday. Today, well, it's a read on wholesale inventories that comes out later this morning. And shares of Super Microcomputer up 8%. The company given more time to become compliant with NASDAQ listing rules. Shares in Apollo Global Management, Workday rallying. They get set to join the S&P 500 on December 23rd. Apollo up about 6%. Workday up 9%. And lastly, shares of Macy's up 2%. Activist investor Barrington Capital takes a stake in the company. Macy's also set to release its results on Wednesday. That's after that delay. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. So you can head over to youtube.com, search Bloomberg Podcast, and that's where you'll find us. S&P 500 up about 28% year to date. I'm looking at the equal weighted S&P, up about 17% year to date. So not so bad there, but clearly a tech bias to that XPX here. What do we do about 2025? Do you take a breather? I don't know. Interest rates are coming down. Earnings seem okay, but valuation's tough. Cole Smead joins us, CEO and portfolio manager of Smead Capital Management, in from Phoenix, where it was 75 on Saturday. Comes into New York, the real world. Cole, thanks so much for joining us here. Again, boy, you look back on 2024, a really solid year from the index level. Mm-hmm. What are you guys thinking about 2025?
It's a great question, and let's start off with, is this the real world? Okay, I think that's a great way of posing this. So, did you know that not everyone in the history of the stock market has got rich?
No, fair enough.
But you'd think today, in the environment that we're in, that God so deemed that in not only the Old, but the New Testament. Mm-hmm. And the issue I have, and we have, and our investors are really fearful of, is the fact that that is really the belief on the street, okay? Yep. And so I point that out because let me just throw out let's just say we don't know valuations. Let's say we don't know anything. Let's just look at who's playing this game. If you look at the St. Louis Fed, they have a statistic called equities as a percentage of U.S. total household financial assets. If you look at that, it's all-time high. Never been higher, in fact. The other two highs were 69 and 99. Foreign ownership of U.S. stocks, never been higher. So I point that out because my dad was just coming back from Zurich last week meeting with investors. And back in 2012, if you talked about the U.S. and the economic setup and politics, the Swiss would, very, stereotypically kind of laugh at you, right? Now they tell you about American exceptionalism. And the only problem is it shows you where the psychology of this is at. It's not that there aren't good things going on in the United States. It's that we only hear the good things. We only pay attention, and everything is a positive feedback loop. Economy is weak. Hey, rates are going lower. Economy is strong. Great. Stocks are going to do great. Okay, you just hear this constantly, and the issue is, if our real problems are federal debt, the inflation is not at bay because of that, and the real cost to bear is the federal government funding that on a going forward basis at a risk-free rate that makes risk asset investors pleased. That looks very fanciful or adorable in our opinion.
Paul set that up in kind of a market context, but let me kind of move into the politics and policy side of things.
Yeah.
Are you optimistic that things will change vis-a-vis the deficit, vis-a-vis what the Fed is doing in 2025, 2026? Do you sense that we're at kind of a sea change moment broadly?
Yeah. Let's just use what Scott Bessent has been saying about the federal deficit. He's been communicating they would hope to have the deficit to 3% in 4 years. That is a hope. Now, what could really stymie that? If we wake up with a 5 or 5.5% 10-year treasury or worse, I can't remember who was talking about it the other day. It was Double Line, Gunlock. He was talking about, what if we went to 6 and the interest cost that drives. We learned in classical economic theory, it was the crowd out effect, right? Too much government demand crowding out the private economy. Well, we had a lot of government demand, but it came at very low rates, so it didn't crowd out from a capital markets perspective. I think we're going to test that theory because ultimately we got to roll this debt. If you look at what Yellen's doing, she's bringing duration down to fund. But I think there's a lot of disconnect there. Risk assets will be hurt by that. That's all risk assets, just like inflation hurts all risk assets. The catch is, what are you paying? Are you comfortable with that? And I think a lot of people are just trying to buy returns. They're not actually buying businesses.
How about valuation here? I mean, you could look again, I was just calling out the SPX up 28%. Earnings have been good, but I'm not sure they've been that good.
Yeah.
How do you think about valuation?
Yeah, I mean, here's the thing is, if someone says, coal at 22 times, let's just say on the S&P, do we think a lot about that? No, we don't. Let me just give you a kind of a textbook example of how we think about businesses. Let's say I take Amazon. I think Amazon's going to do somewhere around mid $40 billion of free cash flow this year. That's what you can look up on your Bloomberg FA, if you want to go there. That's what the street's expecting. Okay, now let's just say I'm an investor and I have to account for things that affect me. So what do? I would take out stock-based compensation. Why? That's a real investor expense. It goes to the employees, but we count it as free cash from a CFA level 2 US GAAP definition perspective, okay? Well, if I take that out, that means Amazon's producing about $21 billion of free cash flow. Now, if you're a $1 trillion business, that's 50 times. But if you're a $2.3 trillion business, it's over 100 times. So when people say, this is not like the dot-com bubble, this is like Benjamin Button stocks. The older they get, the less mature they look. And that's a very damaging thing, we think, for investors.
You mentioned your dad a moment ago, and I love reading his notes, and I think he's so great in the face of the exuberance that we've been talking about. How do you play that when you look at what the stock market is doing, when you look at sort of the fervor and froth that we've seen here? What is the sensible approach as you see it going forward?
Yeah, well, I mean, the one thing I think we can define is you can't look like the S&P 500. I think history begs that to be a very ill-fated attempt. It's kind of a wee willy keeler game. Hit them where they ain't. Where they ain't. They ain't in energy. Okay, and we look at the world's problems today, and we could debate like, okay, what's near-term supply or whatnot. We don't think the Permian is going to be a grower. The last 20 years, they were the largest non-OPEC plus grower. Period. End of story. Full stop. Today, it looks like CapEx is so low. We're going to wake up in 25 or 26 where supply starts to dwindle. And if you just go watch Landman. I keep on telling people, great show. He's doing a really good job. He's like a sell-side analyst who tells you actually what he thinks to his wife, too.
Yeah.
Right? It's wonderful. But I just say that because that's an inherent issue. The market owns very little. So we own over 20%. Market owns 3 and change. If that's a good place to make money, that'd be great. Now, let me add two other things. The other 10-year periods that were nightmares for stocks off that high household ownership was the 1970s and 2000s. Okay, now let's just ask ourselves, oh, that's interesting. What part of the stock market did really well in the 70s and 2000s? It's the energy market, okay? Now, the difference is in the 70s, we didn't have any oil here.
Right.
Today we do, and the drill, baby, drill from a policy perspective, the confidence is we'll be able to do whatever we need to, and Trump will be able to do whatever he wants. The problem is we're way more consolidated today. Look at Chevron's announcement last week. CapEx is going down. That is not what's going on in the industry right now.
So real quick, 30 seconds, where in the energy space are you guys have that exposure?
Yeah, so we own Oxy.
Okay.
We also own ConocoPhillips on the bigger side. We've been taking shots at names that we think are very well positioned, like Ovintiv, also APA. If you go north of the border, we own Synovus. There's a really great business your listeners should check out called Strathcona, ran by a guy named Adam Waters. He's got a B next to his name, which is always a good start. And they're doing some great stuff. But here's what I say. Consolidation's coming, fewer players, better returns.
All right, Cole, thanks so much for
Nice
joining
to see
us.
you.
Really appreciate it. Cole Smead, he's the CEO and portfolio manager of Smead Capital Management.
He's got to get back to the warmth of...
Got to get back, exactly.
Arizona.
That's where the smart money is, back in Phoenix in the wintertime. We appreciate that. Yeah, looking at WTI crude oil, yeah, boy, $68 a barrel here. I filled up the Beamer over the weekend down to Jersey Shore, $2.77 a gallon. How good is that?
Pretty good.
I mean, that's pretty solid.
And they do it
what?
for you.
And you look back, it's the same price as it was 20 years ago.
Sure.
I mean, it's just, I don't know. So anyway, we'll see how it goes. S&P futures here, -3. The Dow plus 10. The NASDAQ negative 39. 10-year Treasury yield looking about 4.16% here. Again, WTI crude 68. Gold 26.78, up 18 points. And since Tom Keene's not here, I'm going to quote Bitcoin.
Go for it.
Bitcoin down 1.7%, just above $98,000 per token. We were above 100,000 per token.
I remember those
earlier,
days. Old enough to remember.
Exactly. 60,000 before the election. Now we're here right around 100,000 on Bitcoin. How about that? This is Bloomberg. More coming up.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, little movement this morning. This is after the S&P 500 notched its 57th closing record in 2024. This year's surge approaching 30%, the benchmark on pace for its best annual return since 2019. Oppenheimer sees the S&P 500 hitting 7,100 by the end of 2025. Citi said its base case target is 6,500. Let's check in with S&P futures. Little change, down about a point right now. We have Dow futures, little change, up 13. NASDAQ futures down about 0.1% or 34 points. The 2-year yield 4.10%. That's a little change. The yield on the 10-year 4.17%, and that's up 1 basis point. The Bloomberg Dollar Spot Index is little change. Few companies making news. Volkswagen, its workers, well, they went on strike for the second time this month, protesting planned factory closures and also layoffs. And shares of HelloFresh trying to rebound after falling the most since August. They're now up about 0.1%. ABC News reported it's under investigation over allegations that one of its facilities used migrant teen workers. And Apple says it's going to begin operating the first of several flagship stores in Saudi Arabia that's starting in 2026. And just a quick check back in with shares of Nvidia. They're down more than 1.5% after that report that China probing the company on suspicions of anti-monopoly law breaches. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning on Paul Sweeney. We're live here in our Bloomberg Interactive Brokers Studio, and we are streaming live on YouTube as well. So head over to youtube.com and search Bloomberg Podcast, and that's where you'll find us. David, looking at the news on the Bloomberg terminal, Israel says it struck chemical weapons storage sites in Syria. The strikes were a response to the fall of President Bashar al-Assad and the rise of opposition groups. So they're, I guess, concerned about some of these sites falling into extremist hands. The U.S. also struck more than 75 targets in there. So it seems like the uncertainty continues to grow in that part of the world. So let's get to the latest reporting. Ross Matheson, news director for EMEA for Bloomberg News, joins us. Ross, there seems to be a lot of moving parts going on in Syria. We're seeing the U.S. Again striking into that part of the world as well as Israel. What's the latest reporting coming out of Syria?
Well, at the moment in Syria, the big question is who's going to be running Syria now that Assad has shot up in Russia with his family. It's really in a state of flux there. You've got the main rebel group, obviously, that swept into Damascus on the weekend, but there are a lot of groups operating in Syria at the moment. It's unclear when or how any of those will work together to potentially form a new administration. Then what does that look like when you move from being sort of a militant group to being a political operator in Syria? So there's a lot we don't know about what next for Syria itself. And of course, the concern of what might else fill that vacuum. You mentioned, of course, you've got Israel moving to shore up the border area with Syria into that buffer zone, hitting targets again in Syria overnight. The US targeting Islamic State operatives in Syria. A sense in that vacuum, does Islamic State try and take advantage, for example? And the worry about, in the vacuum, what comes next for Syria is very real for these countries, be it Israel, Turkey, or further afield in the US. So there's a lot we don't know. Assad, obviously, with his family, the Assad family ruled for decades, very repressively in Syria. But when you remove a family that's been in charge for decades, what comes next?
Ross, let me ask you about recent history here. When we've seen vacuums like this emerge, going back to Iraq, to Libya, if you take those two examples, how much time does it take for all of this to get sorted out? In other words, what are you watching for here, and what's the time horizon by which we'll be able to ascertain sort of what is the state of play, who's in control, who's in power, and how much, to what extent these groups are coalescing with each other?
Well, right now, the Prime Minister is ostensibly still in power to some extent, although no doubt in a very caretaker role, and we don't even know if there are conversations that are happening with the primary rebel group or other groups in the country about forming administration. We saw the head of the rebel group yesterday turn up at a very important mosque in Damascus, but give some very general remarks, again attacking Assad and his legacy, but also just talking about the need to pause and reflect in the minute. Nothing about what next for Syria. So we really just don't even know the timeline here. As you say, these moments could be very chaotic. If you look at Libya, if you look at Iraq with Saddam Hussein, you also look at Pakistan. I remember with Musharraf, the general there, who was very much in charge and an iron fist. And then when they go, what comes in next? It can be a very, very fluid situation. This could go on for weeks because, again, Syria has been arguably micro-controlled by a bunch of different groups for a very long time. How do you get those groups together? And then how do you form a structure of a government out of it?
All right, Roz, thank you so much. We appreciate that. Roz Matheson, news director for Bloomberg News, covering the European, Middle East, and Africa. Red headline, David, coming across the terminal, kind of near and dear to my heart. Omnicom to buy Interpublic Group in a stock-for-stock transaction. I followed both of these companies for 30 years. Two big large advertising agencies. Yeah, so we're seeing, kind of I think 3 and 4 kind of getting together here. They will now become the largest global advertising agency, displacing WPP Group as the largest advertising agency. And it just kind of goes to kind of some issues here about global advertising and the rise of digital advertising and kind of the displacement of some of the traditional advertising medium, whether it be broadcast television, cable television, that type of thing. So a big move in the media space there today.
You talk about some of those pressures. I mean, this has been going on for a while now. Talk a bit about sort of what's been, you mentioned you covered them, what's been motivating this and sort of how well equipped these companies are, this new kind of single company will be to navigate the kind of uncertainty they've been facing, just kind of looking at that media landscape that we're looking at today.
It's really reflected the rise of digital advertising platforms, Google, Facebook, Amazon. If you're a huge advertiser like the Ford Motor Company or Coca-Cola, you can go directly to these big players and get huge audience reach. And what does that mean for the advertising agencies that have historically been intermediaries there? So the advertising agencies have really had to step up their investment in digital and in programmatic advertising to really be of service to their advertising clients. So again, this is consolidation, kind of reflecting what's happening out there in the advertising business.
No small thing to see WPP knocked off that top
Yeah,
position as well.
Exactly right. They've been there forever here. So we'll keep an eye on them. We'll have some more reporting on that. Let's get to these markets here. Seema Shah joins us, Chief Global Strategist for Principal Global Investors. Seema, thanks so much for joining us here. When I think about Principal Global Investors, I think global investing here. As you guys step away and think about 2025 from a global perspective, where do you start for next year?
Good morning. Yeah, I mean, look, I think that's the key question. I was in the US last week. The question marks is around, how much can US exceptionalism really continue? But equally, what are tariffs realistically going to do to the global economies? Where does Europe fit into this? What's going to happen to China, and therefore what's happening to emerging markets? So there's a lot of questions out there. There seems to be some consensus that next year is going to be a fairly constructive environment for risk assets, but a lot of that is centered on the US. Bigger question marks around the rest of the world and how they cope with the various challenges, which are actually emitting directly from the US.
So the 2024 chapter is coming to an end. We're getting ready to turn the page to 2025. How much does your positioning change as a result? How much does the story change, or is there just still so much policy uncertainty at this point it's hard to make any kind of pivot right now?
Well, I think there is a lot of policy uncertainty, as you said, even with regards to, we always talk about Fed policy, but even with regards to government policy now in the US, big question marks on that. But overall, I don't think our positioning has changed that much. We still think this is a constructive environment for risk assets. So it still means being overweight equities, still being overweight US equities, because that's the part of the that global backdrop which continues to perform particularly well. And then still staying quite underweight Europe. I think the last couple of days with the France agenda has probably reinforced that narrative of US over Europe. We need to see how China's going to respond. So we've already heard a couple of constructive comments, but really how far does that go? I do think that with valuations as cheap as they are in many parts of the world, you don't need to see too much good news in order to trigger some kind of upturn. And the question marks we're getting a lot from clients at the moment is, yes, the environment looks pretty good from a macro perspective, but valuations are so rich that where genuinely are the opportunities going forward? So a bit of good news globally, and you could see some movement there.
Seema, we're just a little bit more than a month on from the U.S. presidential election here in the U.S. When you guys got together with your team right after the election, did you change your outlook at all to reflect a Republican in the White House, a somewhat superiority for the Republicans in the House of Congress. Anything change?
Actually, no, not really. I mean, I think the way that the Trump trade started to play out was exactly in line with the playbook, with small caps doing very well, with US doing even better broadly, and then the rest of the world starting to struggle. So I don't think the backdrop has changed, but it does mean that we need to keep an eye on the potential risks. So one of the things that we are seeing is there is so much good news played in for the US, but there is a lot of risk. And the one key risk that we keep coming back to is what happens to inflation. How do the president-elect's policies play out for inflation, both with regards to immigration and tariffs, and potentially with tax policy? So I think that that's maybe where there has been a slight tweak, is that additional focus on where can we get inflation mitigation if some of those scenarios do actually play out.
I'd love for you to look ahead to Wednesday of this week when we get those CPI data and kind of help us understand how you're thinking about that in the context of the next Fed meeting. This is the last kind of major data release, but before that, and also curious, too, we heard the president-elect this weekend on NBC's Meet the Press talking about Federal Reserve Chair Jerome Powell kind of perhaps removing a bit of the uncertainty surrounding whether or not he's going to stay in that position or he's going to try to force Jay Powell to step down or remove him. Just sort of, if you could talk about both those things in the context of this upcoming Fed meeting, that would be great.
Yeah, sure. So I mean, I think the first thing is that the Wednesday CPI number is, I think, everything with regards to next week, because we do know, we've heard from them over and over again that they're very data dependent. And the labor market report last week didn't really give any clear signs of which way they should be leading. We know that the economy is okay, a couple of cracks forming, but nothing too concerning. It really comes down to what are the price pressures and how quickly the Fed needs to cut rates. So that CPI number, as long as it's not a significant upside surprise, we do think that there will be a December cut next week. And then when you get to 2025 and early in Jan, that's maybe when the narrative starts to change. You get slightly more cautious, missing out every other meeting for cuts. The comments over the weekend, I think, are really, really supportive. You know, one of the concerns that we did have going into the election was this talk about a shadow Fed chair, which, you know, at the end of the day, it's very disruptive. It's not what the market needs, particularly if you're taking it back to risk assets when valuations are really expensive. Any kind of negative surprise, any kind of shock or instability can be quite damaging. So I think the comments over the weekend reinforcing the idea that Powell is not going to be removed, that they're not going to be trying to unsettle him, is actually very reassuring. And hopefully it takes the focus away from what is the future for Fed chair, but back to what is happening to inflation, what's going to happen to Fed policy rates, because that, as I said before, is where a lot of the uncertainty lies for 2025.
Seema, what are we doing on fixed income here? Are we sitting here with the 2-year Treasury at 4.1%, or are we taking some credit risk here?
I think you do need to take some credit risk. You know, spreads are, of course, very, very tight. But as long as you don't believe that there's any risk of recession, and certainly we're not in a recession camp, we firmly believe that this is going to be a soft landing, maybe some slowdown in the second half of next year. But we're not expecting defaults to spike by any means. So, you know, with Treasury yields sitting where they are, there is, I think, a little bit of upside risk to where Treasuries could go through 2025 as you get into the discussion around the budget deficit and tax cuts, etc. But overall, in a constructive macro environment, you can start to think about what is that additional yield pickup, which means going into IG, venturing into high yield, just getting that little bit of pickup wherever you can.
All right, Seema, thank you so much. We appreciate that. Seema Shah, Chief Global Strategist for Principal Global Investors. Again, the M&A news here on a Merger Monday. Omnicom buying Interpublic Group. That's in the advertising agency business. Big deal there in that space. And all-stock deal, I'm looking at IPG. It's up 15% in pre-market trading. Omnicom down about 3%. First thing I do when I see a merger deal, I go to MA Go and I figure, who's getting paid here? Who on Wall Street's getting paid? PJT, Paul Taubman, former Morgan Stanley senior banker, he's advising Omnicom, and Morgan Stanley advising IPG. And I was just, noting Morgan Stanley has owned the advising and underwriting in that business, the advertising industry, forever. I could never compete. I got maybe a couple co-managers on some bond deals, maybe over 20 years. Brutal. Good news there. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Little movement in futures. This as investors focus on an upsurge in geopolitical risk, also the outlook for interest rate cuts as well. So we have NASDAQ futures leading the downfall, down about 0.2%, 44 points. S&P futures, little change, down about 4. Dow futures up about 3 points. The 2-year yield, 4.11%. That's little change. The yield on the 10-year, 4.17%. That's up 2 basis points. To commodities, oil on the rise. Brent crude up more than 1%. That's after the toppling of the Syrian regime. Right now, that's at $71 a barrel. We have WTI crude at $68 a barrel. Spot gold higher at $2,653 an ounce. The Bloomberg Dollar Spot Index is little changed. EV stocks, those are on the rise. Well, the reason why? The China Passenger Car Association, it said car sales rose sharply in the country last month, with Tesla actually selling more than 78,000 vehicles. Shares of Tesla up more than 2%, Rivian up 3%, and Lucid up 2%. And shares of Advanced Micro Devices, they're down about 1%. That's after a downgrade at Bank of America. And Reddit shares up more than 4% after an upgrade from Morgan Stanley. The bank also almost tripled its price target on the stock. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Are you a baseball fan, David?
Well, I am. I'll tell you, there's a bit of a schism in my family. I've got 2 boys. One's a Yankees fan, one's a Mets fan. And I'm very curious what this means for the Yankees fan who is a devoted Juan Soto fan. Is he going to be heartbroken, or is he going to move over to the Mets and we can finally watch one game versus the other?
So it's big in the Gura household. The economics here are kind of what get to me. All right, 15 years, $765 million for Juan Soto. Obviously a great player. But Bloomberg's got the reporting here. The signing brings the Mets' total spent on player salaries under Cohen to $1.6 billion, cementing his status as one of the sport's biggest spenders. And I think that's where we're going on a lot of this stuff. Right?
Yeah, we knew he was going to spend big. He wants a championship. We'll see.
We'll see how it goes. It's all driven by media rights fees, so we'll see how that plays out. But big money.
Who's your team? I don't even know.
I'm a Yankee. I'm a Yankee. I've been a Yankee guy.
You're heartbroken? I guess it was only a year. It was 1 year.
Yeah. No, I could care less.
Yeah.
But they'll be fine.
Okay.
But he's a great player. So the Mets are in good shape there.
Now, a look at the front pages. What's making news around the world? Your daily roundup of today's headlines from major publications.
Your daily look at the front pages around the world. That's brought to you by Oppenheimer. And Oppenheimer focuses the power of their thinking on you, creating customized plans to help achieve your goals. Put the power of Oppenheimer thinking into your investing. Call an Oppenheimer professional today. Lisa Mateo, newspapers. What do you have for us today, Lisa?
Okay, so this is the management top 250 ranking. Microsoft actually has been dethroned from that annual list. This year, 842 companies. They were graded 5 categories. Unseating Microsoft for the #1 spot is, I don't know if you have any guesses, but it is Apple. Yeah, I kind of guessed that. Microsoft held actually that top spot for the past 4 years. So if you look at the top 4, then you have NVIDIA, followed by Microsoft, and then there's Intel. But 2 other tech companies actually, they scored in the top 10. You have Alphabet and Adobe also in there. But 4 non-tech companies also in the top 10, like MasterCard, Philip Morris, Johnson & Johnson, Procter & Gamble too. But yeah, Microsoft has been dethroned from that annual list.
I wonder how they rate them, rank them, stock price performance, financial returns. Do people like working there? I don't know. But it's interesting. So there are a lot of technology companies.
Yeah, a lot of tech companies.
Healthcare at the bottom of that list.
Oh, no.
Looks like.
Is that right?
So, anyway, that's where we are.
I don't know. See, I'll bash healthcare companies for the high cost of drugs, just like anybody else. But boy, in the pandemic, they came through big. I mean, a year after they come out with the vaccines. How about that?
And it seems like this may be telling the story of that, how well they did then, and now where we are, and sort of how the things have ebbed and flowed a little bit.
Yeah, exactly. All right, what's next?
Okay, Mayor Eric Adams, New York City, being criticized for his administration picks to run that downtown Manhattan heliport, the one that we have here. The Post actually has this. They explain why, because they say the administration chose 2 foreign firms to run that heliport. It's actually owned by the city. And it has a lot of national security circles worried because says the president's Marine One chopper uses
I've seen
it.
This, yeah.
Yeah, and then U.S. military, federal law officials use it as well.
I didn't know that was city-run.
It is it's city-owned. Yeah, city-owned heliport.
City-owned,
So
okay.
it's the Economic Development Corporation. So they chose, it's downtown Skyport. That's a partnership between Skyport's Infrastructure, a UK-based firm. And then they chose France's Group ADP that operates Paris's 3 airports. So both companies, they replaced Saker Aviation, that was before it. But they're just saying that, a lot of information is given there. And then you have foreign companies kind of running it. So they're saying that could be a red flag.
My eye goes to this. The current operator faced controversy last year after it was revealed that William Wachtel, chairman of the board of Saker Aviation, is law partners with Morris Misri, a board member at the EDC. So I think that's what precipitated this.
Yes.
I don't know.
A little conflict of interest there. Just a bit.
I don't fly a helicopter.
You haven't? No,
so
only on rare occasions are you flying in from New Jersey.
Well, the thing they're saying, because a lot of people complain about the noise in the area from all the helicopters. Yeah. So the thing that they said was downtown Skyport, they actually developed the use of quieter electric vertical takeoff and landing aircraft. So maybe that could help out. But yeah, still some concern there though.
Okay.
So this next story, I'm not sure. Paul, I know you haven't been on a Disney cruise.
No, I have been on a Disney.
You have?
So this
on
is
the
what
Disney
we did.
cruise?
For analyst investors, they would take you, when you fly out to LA the one time we did it out of Miami, and they take you out for like an overnight, and then you come back in. So it's like literally if you go out.
So you did an overnight.
Right, and so you have investor meetings in the afternoon, then you go party crazy overnight, and then you cruise back for all the analysts and investors. So I did that twice. And their cruise ships, having been on a few cruise ships just for analyst meetings, they are different.
Impressed?
Huge. The quality is unbelievable.
Oh, and you've taken the family, David? No?
I have not. I've never cruised on any vessel, Disney or otherwise, but I have gone to Disney World. That's my latest.
But they're really putting their money behind it. They want to more than double their fleet from 6 to 13 ships by 2031. But it's a good time for it, right? You have cruise travel surpassing pre-pandemic levels. You have these bigger ships, big amenities, rising international fares. So people say, you know what, it's cheaper for me to take a ship at a port by us instead of booking the whole international fare. But they do cost more than, let's say, Royal Caribbean or Carnival. That's the other thing. But a big focus is actually, this was interesting, this was on the Bloomberg, is the Asian market. Because they don't have those theme parks. So they book those trips. They're launching Disney Adventure. It's the biggest ship yet. It holds up to 6,700 passengers. And tickets go on sale starting tomorrow for that, a year in advance.
Wow.
And
out
in the
of
Bloomberg
Singapore.
Terminal, they've got this rendering. The thing is just massive.
They already seem so, like even just around New York, if you look in Brooklyn or on the West Side, they're so huge as it is. I can't imagine them being twice as big as.
It's great.
I mean, I was actually taking the ferry from the east side, Manhattan, down to the Jersey Shore a couple weeks ago, and I'm just looking at my phone. I happened to just look up, and we were passing a cruise ship that blocked out this entire sky. Like, I noticed I was looking at my phone, and then it got dark inside our little ferry. And it's like, so anyway, Charlie Pellet is our resident cruise person. So if you need any
I wonder if he's been on the Disney one. We're gonna have to ask him.
Exactly.
We'll see about that. And finally, the end of the era. Taylor Swift's concert tour closes. Record-breaking ticket sales. Hit it, Ken. Thank you, Ken. Love it. Taylor Swift. Okay, boosted the local economy, but now her touring company is telling the New York Times there is a price behind this, okay? It's through its 149th final show, which was in, Vancouver, British Columbia on Sunday, sold just over $2 billion in
with
ticket sales, with a B, double the gross ticket sales of any other concert tour in history. It's crazy.
Did you see a show on the tour?
No, I have not seen.
My daughter did.
Oh, she did?
Yep.
Oh.
But she couldn't get tickets she lives here in the city, couldn't get tickets to any of the New York City shows.
Yeah.
So took a train down to Philadelphia, got a hotel room overnight, ate a couple meals in Philadelphia, and saw the show down in Philadelphia, giving probably $500 or $750 of economic value to the city of Philadelphia. So I think it's definitely a real thing at concerts.
Have a huge effect. And then, I didn't see a show, but we saw the movie. I know there's all those knock-on things as well, because there was that, and the books and all of that.
The book, the pact with Disney to stream the thing, Disney Plus. I mean, that's not even including that. So yeah, she's been a powerhouse for sure.
All right. Newspapers, Lisa Mateo, thank you so much. We appreciate that. More T-Swift. Good morning.
bleachers, dreaming about the day when you wake up and find that what you're looking for has been here the whole time. If you could see that I'm the one who understands you, been here all along, so why can't you see you belong with me? You belong with me.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
What do you say to people scared stiff in cash?
We've got an administration, presumably, that will be pro-business, lower taxes.
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Mark Champion, Bloomberg opinion columnist, talk about his column, arguing why Western allies ought to intervene after the collapse of the Assad regime in Syria. Callie Cox joins us. She's Chief Market Strategist for Ritholtz Wealth Management. She's going to join us in studio and give us her 2025 outlook. Roz Matheson, News Director for Bloomberg News. Again, the latest reporting coming out of the Middle East. And then Veronica Clark, U.S. economist with Citi, discusses the risks of U.S. tariff policy in a second Trump term. She's going to join us in studio as well. So everybody's getting out and about in New York this morning. We appreciate that. Bloomberg Surveillance brought to you by Cohn Resnick, Advisory, Assurance, Tax. Discover optimization strategies that are helping CFOs make their finance function more competitive and resilient. Talk to Cohn Resnick's advisors. Let's get a Bloomberg Business Flash this morning with Lisa Mateo. Lisa.
You've got it. We've got futures kind of struggling for direction. Political turmoil in the Middle East. South Korea offset some optimism over China's monetary policy shift. We have NASDAQ futures down about 0.1%, 39 points. Dow futures little changed, up 4. S&P futures down about 4. The 2-year yield 4.11%. That's up 1 basis point. The yield on the 10-year 4.18%, and that's up 2 basis points. Korean markets extending their declines. Opposition lawmakers pushing for another impeachment vote on President Yoon Suk-yeol. Right now we have the Kospi down more than 2.5%. The Korean won down 0.6%. The Chinese yuan up 0.1%. Kind of erase those losses. China's top leaders announced they're going to embrace moderately loose strategy next year. And then we have U.S.-listed Chinese shares on the rise. That's following along from a strong close for Hong Kong benchmark. Alibaba up 6%, PDD up 7%. We have JD.com up about 8%. Shares of NVIDIA, they're lower. They're down nearly 2%. Report that China probing the company on suspicion of anti-monopoly law breaches. And yes, it's official. Omnicom Group agreed to buy Interpublic Group. It's a stock-for-stock transaction that has shares of Interpublic up about 14%. Omnicom up down about 3%. And this headline just crossing the Bloomberg right now. Novalex to buy Pactiv for $18 a share in cash. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene and Paul Sweeney live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Just following, I'm seeing the full reporting here on Bloomberg News on this Omnicom to buy Interpublic to create the largest ad agency. Will have a combined revenue of over $25 billion, surpassing WPP as the market leader. The merger is seen as a response to pressure from tech giants and the rise of generative AI, which could replace creative work done by ad agencies. You think Don Draper, Mad Men. I mean, you can't replace Don Draper.
Mergers were a thing back then, too.
Exactly, exactly right. All right, let's get the latest coming out of Syria here. There's a very fluid situation, David. We've got plenty of Bloomberg reporting here. Now the question for a lot of folks is, what role, if any, should the U.S. and other Western allies, what kind of role should they play here in the reshaping of Syria in a very delicate part of the world? Mark Champion, a columnist for Bloomberg Opinion, suggests that Assad's flight demands West's engagement in Syria. Mark, thanks so much for joining us here. Again, very early days here of this news coming out of Syria. We're not even sure who's in charge here. What role do you believe the U.S. and maybe some of its Western allies should play, if any, in the new Syria?
Right. Well, as you say, it's very, very fluid. So this could all end up in, more civil war, and nobody can really do anything, to be very frank. But assuming that the sort of initial, more kind of hopeful signs about HTS, this former Al-Qaeda linked group that has kind of taken control in Damascus, assuming that they continue to kind of moderate their stance, to work with the former Ba'athist officials rather than kill them, etc. Assuming that something can be done that is constructive. What we have now really is a situation in which Turkey is more or less in control, is the outside player with the greatest control, because they were the sponsors, facilitators of HTS across the border in Idlib province, across the Turkish border, and it's thanks to Turkey that they were able to provide themselves, etc. So the question really for the West then is, what's Turkey going to need? Turkey's going to have a number of issues with the U.S., for example, over the Kurds. Is not a great friend of Israel, but Turkey is going to need help. It wants to get the refugees. It has 3.6 million or more refugees from Syria in Turkey. It's a political problem for President Erdogan, and they want to get them back home. To do that, they're going to need economic development, reconstruction, etc., for which Turkey really doesn't have the money. And that is where Europe, the U.S. Can help, can have some leverage, and should get involved. Again, assuming that there is a kind of base scenario, a base situation in the country that allows anything to happen.
Mark, you bring up the U.S., and I saw the president-elect's tweet or post on X over the weekend. Syria is a mess, he wrote, but is not our friend. And you write in your column about this notion of a post-American disorder, this happening sort of without direct American engagement. Of course, the U.S. has, 900 troops who are in Syria. At this point, we saw the campaign that President Biden authorized over the weekend, limited, very narrow campaign. How difficult will it be for the president-elect to sit on the sidelines here in the face of what you just described, these sort of countervening forces, the sort of dysfunction within Syria itself, all of these disparate groups? We have a president-elect who doesn't want to get involved. Is he going to be able to kind of maintain that tack going forward?
He'll be able to. If he wants to withdraw U.S. troops, he can. There will be, a reckoning for the Kurds in that case. But what I think his administration will have to explain to him is that everything has a consequence. So, for example, Israel is very keen on supporting the Kurds. They are a relatively friendly force, stabilizing force as far in the Levant as far as Israel's concerned. Israel now will have significant worries about what this new Sunni Islamist regime is going to do when it comes to the Israeli-Syrian border. And that's why you see Israeli troops even going across the border at the moment, taking positions that the Syrian army has left, because they just don't want to take the chance of letting that fall, those positions be occupied by HTS and other groups. So everything that you do or don't do has a consequence. And the U.S. has ended up with this kind of very limited role in Syria. They really had nothing to do with the events of the recent weeks, but they have played a role in trying to make sure that ISIS doesn't return. They have played a role in making sure that the Kurds don't get overrun by either Turkish forces, which are in northern Syria, or by the Turkish allies like the Syrian National Army and HTS.
Mark, what do we know about what role, if any, Russia would like to play here? Because this is a black eye for Russia here. Do we know what their interest may be?
Well, they will hope, I would think, to be able to, salvage their port at Tartus. It's their one port on the Mediterranean. And I would think that they would like to, salvage that toehold. They've had to abandon it for now. They want to make sure that they don't have a repeat of what happened in the Afghanistan with U.S. equipment, where it suddenly, was commandeered by the Taliban. So they don't want to see that happen. So they've removed their ships, etc., their equipment, their people. But I would think that they would hope that they would be able to return and play some kind of role. And in that, we don't know what the conversations were between Turkey, Iran, and Russia, in the lead up to HTS, breaking out of Idlib and taking Aleppo and then Damascus. But there were three-way talks at very high levels, and I'm sure things of that nature were discussed.
All right, Mark, thanks so much for joining us. Mark Champion, he's a columnist for Bloomberg Opinion. Check out his opinion columns on the Bloomberg terminal. You can see that on Bloomberg.com/opinion as well for Mark's opinion work, as well as our other opinion columns as well. With our news in New York City, here is Michael Barr.
Thank you very much, Paul. David, Lisa. Syrian leader Bashar Assad and his family reportedly arrived in Moscow, where they were granted asylum by the Russian government. It comes after a stunning rebel advance swept into Damascus to cheers and ended the Assad family's 50 years of iron rule. Bloomberg News Director for Europe, the Middle East, and Africa, Rosalind Matheson.
Well, at the moment in Syria, the big question is who's going to be running Syria now that Assad has shot up in Russia with his family. It's really in a state of flux there. You've got the main rebel group, obviously, that swept into Damascus on the weekend, but there are a lot of groups operating in Syria at the moment.
Bloomberg's Rosalind Matheson. In his first network TV interview since the election, President-elect Trump outlined what he was going to do on day one in office.
A lot of it will have to do with economics. A lot's going to have to do with energy. A lot's going to do with having to do with the border. We're going to immediately strengthen up the border and do a real job. And some of the basics.
Trump spoke on NBC's Meet the Press, heard Sundays on Bloomberg. South Korea's Justice Ministry imposed a travel ban on President Yoon over martial law. On Saturday, he avoided an opposition-led bid to impeach him. Finally, as delivery drivers work to get packages delivered in time for the holidays, authorities are again warning people about porch pirates. In Oakland County, Michigan, Sheriff Mike Bouchard gave some insight into just how these thieves are able to rip people off.
Especially with iPhones, there's actually a very organized group that somehow tracks the shipping of iPhones, and they know when it's going to be delivered to a house, and they immediately go take it.
Sheriff Bouchard urges people to up their vigilance regarding deliveries, especially during the holiday season. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. Looking at some reporting here, President Trump-elect says for the first time that he has communicated with China's President Xi after the election. So wasting no time there, starting that dialogue, which I kind of feel like having a dialogue is better than not.
Yeah, it's funny. So I was down at the G20 where President-elect Trump obviously wasn't there, but so many people were talking about him and wondering about him and what he was thinking, and you kind of saw the twilight of the Biden years in full effect there. And then you had these leaders who were going to Mar-a-Lago on the way or on the way home. And I think that you're getting to a very good point, which is that a lot of these leaders just want to know what's bombast, what's going to be policy, what's he actually going to do, and why not go to the source itself. So it's unorthodox. We haven't seen this level of engagement before, but I think with him in particular, there is an eagerness to know sort of what's real and what's not and where he's headed with this.
Yeah, exactly. And so, it just kind of makes me feel a little bit uncomfortable with the Cold War, whether it's a technology Cold War between the West and China. It just feels like engagement is the better.
NVIDIA news as well. I mean, that's
Yeah,
like another
the NVIDIA
thing.
news
This
is
morning
exactly
reporting
right.
that China's looking at NVIDIA for a breach of its monopoly law. So
Yeah, and that's the most read story here on the Bloomberg terminal. Again, China has opened a probe into NVIDIA over suspicions that the U.S. chipmaker broke anti-monopoly laws around a 2020 deal, taking aim at the AI heavyweight as Washington ramps up sanctions. So you've got sanctions, you've got tariffs, lots of moving parts there in global trade, and we'll stay on top of that. S&P -4, Dow up 17, NASDAQ off 44. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got little movement in futures, and this after stocks extended their record-breaking run on Friday. That was following jobs data, increased bets on a December rate cut from the Fed. Now, swap traders price in a roughly 80% chance of a quarter-point easing at the Fed's December meeting. We'll head over to NASDAQ futures, down 0.2%, 44 points. Dow futures, little changed, up 18. S&P futures, little change, down about 4. The two-year yield, 4.12%. That's up 1 basis point. The yield on the 10-year, 4.18%. And that's up 3 basis points. To commodities, oil rising after the toppling of President Bashar al-Assad's regime. Right now, Brent crude up more than 1% at $72 a barrel. WTI crude $68 a barrel. We have spot gold at $2,656 an ounce. The Bloomberg Dollar Spot Index, little change, and we have Bitcoin down nearly 1.5% at around 98,000. More inflation data due out this week. We get the November Consumer Price Index on Wednesday, also producer prices on Thursday. We have shares of Microcomputer. They're up 9%. This is after the company was given a little bit more time to become compliant with NASDAQ listing rules. And shares of Apollo Global Management, Workday, rallying. They get set to join the S&P 500 on December 23rd. You have Apollo up 5%, Workday up 8%. And lastly, shares of Macy's up 3%. That's after activist investor Barrington Capital takes a stake in the company. Macy's will release their results on Wednesday after that delay. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Lisa Mateo. That's a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well, so go over to youtube.com and search Bloomberg Podcast. University of North Carolina, Chapel Hill.
That's where you're going to start with this.
That's where I'm starting.
Yeah.
I mean, I love to. Nobody loves bashing Chapel Hill more than me, but
it's true.
They have a lot of smart people coming out of that place.
Yeah,
and a lot of them are employed here in journalism. I don't know what that's all about. I think they have a good journalism
They have a great
school.
business journalism program in particular.
All right, you tell me. I'll go with it. Callie Cox is one of them. Chief Market Strategist at Ritholtz Wealth Management. She joins us here in our Bloomberg
So
Interactive
gracious.
Broker
That was
Studio.
the most gracious.
I know.
It's
I
the
feel
new
so
me.
honored.
It's
the new you.
Me. Yeah, exactly. I'm turning over a new leaf. We can both coexist. We're 15 miles apart on.
True.
15.
If that.
10 miles. 15,501 between Durham and Chapel Hill. Callie, we're thinking here. S&P 500 up 28% year to date. Even on a equal weight basis, up 17% year to date. Pretty solid returns for this equity market. How do you guys kind of reset and think about 2025?
Well, I like what you said about equal weight, Paul, because I think that's where the focus should be going into 2025. Yes, the S&P has had an incredible year. It's actually the second straight year of 20% gains. And we're telling investors not to get too greedy. I mean, you don't see 20% gains happen year after year very often. So, I think the point here is to look underneath the surface, look for value underneath the surface. And what you said about the equal weight index shows that we are getting some return on those more value-oriented stocks, those unloved areas of the bull market that are finally getting their day in the sun.
Give us a few of them, such as what's unloved? Where's the value? What's unloved as you see it?
Well, such as, I think the easiest place to start is stuff outside of tech.
Yeah.
There's been a tech versus everything else trade
Yes.
going on. So when people talk about valuations in the S&P, typically they're talking about big tech valuations. And you have to sort out by sector and sector to really find the value. We really like rate sensitive sectors here. I think real estate is interesting. I think consumer discretionary could be interesting, especially if the economy holds up through 2025. Financials, of course, have been really strong in the back half of the year. That could also be interesting, especially if the economy surprises to the upside. But what we're communicating to investors is you don't get too greedy here, but at the same time, don't get too downtrodden on this market. There's a gray area that you can exist in going into next year.
So, talking to Barry Ritholtz a lot, I mean, I know you guys think really long term for your clients here. How do you think about, well, let's step back. We're a month removed from the election here. We've got a new political outlook here for this country over the next 4 years, both in the legislative branch as well as the executive branch. Did that change the way you guys at Ritholtz think about opportunities, risks going forward?
Well, of course, we discussed it, right?
Yep.
I feel like if you're a risk manager and you haven't discussed the election and the potential changes in policy, then you're not doing your job. But we are catering to long-term clients that are looking 10, 20 years down the road. And at this point, it really is a bunch of short-term speculation. And, I take comfort in the fact that I'm not a policy analyst. Mm-hmm. I'm not the one that has to step out there and say tariffs could happen, tax cuts could happen, insert policy here could happen. But what we tell investors is to kind of take the policy news as it comes. We're not even at inauguration day yet. We're not sure what policy will actually be passed. And what we saw in 2016 was there was a lot of back and forth around policy. And, it took years for everything to settle out. So we're taking it as it comes. We're telling investors to stay vigilant, but to not, dive too far into headlines there.
We've got Veronica Clark, another UNC alumna, in the green room, another Tar Heel coming up here. We'll talk about sort of the fundamentals of the labor market as she sees it. But could you talk about the way in which, for instance, the jobs data that we just got inform your thinking about positioning, sort of the health of the economy, dovetailing that with your outlook? So less about sort of the politics and potential policy, but what we're seeing in the real economy today.
Yeah, well, the job market is almost everything, David. Americans in this capitalist machine that we live in, if Americans are making money and they're spending money, the economy most of the time is doing well. And that's what was proven to us over and over again in 2022 and 2023. So the job market is at a moderate, expanding at a moderate pace right now. Unemployment is rising, which is concerning. Luckily, it's not rising on the layoff side. When people think about unemployment, they think about mass layoffs. Mm-hmm. That's not happening. It's more so people entering the labor force and not necessarily finding a job so quickly, which isn't good, but it's not the worst news. So as we head into 2025, the job market has surprised us all. Corporate profits are growing, so hopefully that leads to more hiring. But this is the biggest concern for me. You see recessions and big market crises happen almost, in tandem with each other. So as we head into 2025, we're talking about the job market a lot. We're saying watch jobless claims, keep your finger on the pulse of the pace of hiring and use that to guide you when it comes to the economy and to what the Fed does.
How about valuation? How do you guys think about valuation these days in this marketplace? Because again, just on the SPX up 26, 27%, I'm not sure earnings have grown that fast.
They haven't, but people expect them to grow that fast in 25, and I'm not sure how to feel about that. But when we talk about value in our minds at Ritholtz is the great equalizer. You know, markets over the long term balance out toward value. So we try to emphasize, you know, focusing on value, especially in markets like these where there are pockets of value, but then also pockets of, you know, expensive stocks that people are talking about, right? Pockets of expensiveness, if that's a word. So, you know, value is a big, you know, priority for us when we're thinking about investments at Ritholtz, and we still think there's a lot of value in this market.
Can I ask you lastly just about buybacks? I'm very uninformed on all of it, but I see that we're heading for another record here, and obviously this is a time of year when there are a lot more of them. How is that affecting the market? What does that say to you about the health of the markets, the quantity of buybacks that we're seeing from companies?
Well, I'm going to put my analyst hat on
Please.
and say if you own a stock and your stock is doing a buyback, then that's probably the best outcome for you from a tax perspective. Take a step back, you know, a lot of companies are doing buybacks. That's probably a good sign for the, you know, year ahead, although it could show that markets are a little bit frothy. I don't think too much about it. You know, I think we're in this era where, you know, companies are paying attention to their capital and to what they can do for shareholders. Not necessarily as much to workers, although that's gotten a little bit better in the past few years. And I'd like to see that come into balance a little bit more because I think that could solve a lot of problems in the economy. But the level of buybacks right now isn't too much of a concern for me.
No Belichick commentary. You don't want to get in on that?
Well, I came prepared.
So what is the thinking amongst the Chapel Hill folks? Is he going there?
I think it's like it's his if he wants it. Is what I've read.
It sounds like it's almost a done deal, and that's kind of crazy. We could have cut off sweatshirts on the sidelines.
Yes. I mean, I thought he would have gotten an NFL job, but I mean,
well, I think he was looking at Jacksonville. Jacksonville was looking at him as well, but who could resist Chapel Hill?
Chapel Hill.
You know, I don't know.
It's a beautiful place.
It's the best job in college football right now. It really is. It really is. It's a great institution. It's a program that can grow. We have a good amount of money.
It's a basketball school, though, so I'm told.
It's true.
They said that about Duke for many decades,
exactly.
And now look at you. So.
We're going to another bowl. I think they're going to the Tax Slayer Bowl.
Yes.
Duke is. So watch out. Callie Cox, thank you so much. We appreciate it. Callie Cox, Chief Market Strategist for Ritholtz Wealth Management. Looking at this market right here, the S&P futures down 3 points. The Dow up 20. The NASDAQ down 38 points. The VIX, calling out for Tom Keene, 13.44. It was below 13.4.
Quiescent VIX.
Quiescent. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Futures, well, right now we've got a mix of red and green on the screen. This is after the S&P 500 notched its 57th closing record in 2024. This year's surge approaching 30% with the benchmark on pace for its best annual return since 2019. You have Oppenheimer sees the S&P 500 hitting 7,100 by the end of 2025. Citi said its base case target is 6,500. S&P futures right now down about 2 points. Dow futures up about 24. Nasdaq NASDAQ futures down about 33. The 2-year yield, 4.11%. That's up 1 basis point. The yield on the 10-year, 4.17%, and that's up 1 basis point. The Bloomberg Dollar Spot Index is little change. Few companies making news. Volkswagen, its workers, well, they went on strike for the second time this month, protesting planned factory closures and also layoffs. Apple said it's going to begin opening the first of several flagship stores in Saudi Arabia. That's starting in 2026. And finally, checking back in with shares of NVIDIA. They're down more than 2% after that report that China probing the company on suspicion of anti-monopoly law breaches. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura and Paul Sweeney, we're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Economic indicators today are brought to you by IBKR Financial Advisors. Switch to Interactive Brokers for lowest cost global trading and turnkey custody solutions. No ticket charges and no conflicts of your interest at ibkr.com/RIA. Let's get the latest reporting from Syria. Fluid situation over there. Ross Matheson joins us. She's the news director for EMEA for Bloomberg News. Ross, what's kind of the latest reporting here? I guess I'll start with a basic question. Who's in charge in Syria right now?
Well, in fact, we're just getting news at the moment that the rebel group, the key rebel group that ousted Assad, is trying to form a transitional government that's possibly a bridging government until they work out exactly what they're doing. But they've tasked a guy called Mohammed al-Bashir to form a transitional government. He is someone who headed up a quasi-government that this group ran out of Idlib. It was kind of a shadow government against Assad in the northern Syrian city of Idlib for some time. So it's got some experience, I guess, at least running a shadow administration. And this seems to be a transitional move, at least while they try and work out a broader power sharing arrangement potentially, or a proper administration going forward. But that does seem to be at least an initial effort to put some kind of system in place here in the aftermath of the very chaotic and rapid removal of Bashir al-Assad.
Ross, you've been charting this over the last many weeks, and certainly before that as well. But looking at what happened here and how much changed in recent weeks, this was a civil war that really was grinding on for years, and then we saw it accelerate so quickly as we saw rebels kind of moving through cities to Damascus. What accounts for that? What accounts for this kind of sudden erosion of support from Iran, from Russia, that led to Bashar al-Assad finally fleeing to Russia, as we understand it?
It does seem to have happened very quickly, as you say, in a war that was going on for many, many years, and it kind of ground into a bit of a continuous pattern, an uneasy pattern in recent years. It wasn't a fully fledged conflict, but there were certainly skirmishes and something going on there. But what seems to have happened is that the rebels just picked a moment and had a go, and surprisingly found themselves suddenly in control of Aleppo, which is a key city in Syria, and at that moment momentum was there, so they decided to push on, and what they were testing really was the resiliency of the Syrian army in that moment. And it seems like the Syrian armed forces just collapsed in the face of it very quickly, including on the pathway to come to Damascus. And when Iran and Russia saw the Syrian army essentially collapsing, they weren't going to put all their military efforts in there to try and shore up Assad if the army was not doing what it needed to. And they've got their own tactical problems elsewhere at the moment, their own distractions outside Syria. So they just said it's not worth us coming in heavily militarily to do so. So it seems as though the Syrian army just fell apart in the minute.
Roz, thanks so much for joining us. Always appreciate getting your reporting here on this fluid situation in Syria. Roz Matheson, she is news director, EMEA, for Bloomberg News. She is based in London. Let's get back to the U.S. here, focus on the economy. We're joined by Veronica Clark, U.S. economist for Citi. Veronica, we had some labor data recently. I don't know, it seems like the labor market in the United States is pretty darn solid. And if that's something that the Fed is looking at, how do you think, what kind of cues do you think the Fed is taking from this U.S. labor market?
Yeah, I think I would actually disagree with the interpretation that the labor market is as solid as everyone is saying it is. Obviously, we've had a couple months where the unemployment rate isn't dramatically shooting higher, but it was only last week that Chair Powell was saying the risks around a sharper labor market deterioration have diminished. If anything, the data that we got on Friday to me looks like a weaker labor market than before they cut 50. The unemployment rate is higher, and that's with fewer people participating, and that's with the slowing pace of payroll job growth. This still looks like a trend that is pretty unfavorable for
I see your guarded pessimism here, or you're saying we should look at it more carefully. How messy are these data, the ones that we got last week and the ones before that, and how's that influencing just your perspective more broadly on the health
Yeah, very, very messy. I think we're taking our signals from that unemployment rate, that household survey. It was the payroll survey that was very weak in October. We had that large 227 bounce back in November. Of course, there's strikes and hurricanes in there. But we also know that even with that pace of averaging through that bumpiness, we do know that number is overstating true job growth by about 70K a month. That's what the preliminary revisions taught us. The details of the household survey where the unemployment rate comes from, that looks much worse.
All right, so what is the city GDP call for 2024 and 2025?
Yeah, I mean, this year, of course, we're on track to run a pretty strong, healthy, 2.5, kind of average annual pace. We've been running 2 to 3% GDP growth for a while. I would say it's notable that we have been running, above potential growth, and the labor market has still loosened. We've still had an almost percentage point increase in the unemployment rate. We are expecting next year we'll just see more weakness, and at some point people cut back on spending. Something closer to 1% GDP growth maybe for next year.
Really?
Yeah, much
You guys
weaker.
are at City. You're supposed to be optimistic. No? All right.
We've got this Fed meeting on the 17th and the 18th, so one more before the holidays. The last one, I guess, in this administration, under this administration. What are you watching for ahead of this? We get the CPI data this week. It's a swirl of notes that I read, but you were expecting a cut of 50 basis points.
Yes,
Is that still the case, or you walked it back?
We did need to see an even more of a downside surprise to Friday's numbers to get that 50, but I think it's very likely a 25. It seems like a really high bar. It's really, I think, only the inflation data this week that would deter them at this point. Seems like a high bar to do that. And I am expecting to see that inflation data for November look a lot more favorable than for October and September. Something that, again, looks like a 2% annualized core PCE rate.
Veronica, you're a little bit maybe more cautious than I am on the labor market. How about the consumer? How do you guys viewing the consumer here?
Yeah, I mean, consumption really has been the main driver of growth for a lot of this year. I think that'll look especially true in Q4. But if the labor market is starting to turn, you would think that consumption story changes. Savings rates are very low. They were actually even revised lower in Q2 and Q3. There's just not a lot of extra ammunition there. Consumer delinquencies are well above pre-pandemic levels. If we are getting to a point where unemployment is rising more sharply, job growth is slowing, people are losing their jobs, you would think that they cut back on spending.
What have you been able to divine from what we've heard from Fed speakers going into that meeting? You brought up Jay Powell speaking recently. He was at the Dealbook Summit. Before that, he did a sit-down with Catherine Rampell of the Washington Post. He's given these kind of very long-form one-on-one interviews to a big audience, us included. What have you taken away from that just about the direction of the Fed, sort of what he and his colleagues might be thinking about or how they're framing the progress that they've made going into that meeting?
Yeah, I mean, of course, the narrative now, the conversation now is, how close are we to a neutral rate? Rates are still restrictive, we can still be cutting, but maybe we slow down. There is the stickiness to inflation. But I don't think actually listening to Fed speak is terribly helpful right now. I do think the most important thing to form your view of where the Fed is going is what you think is going to happen with the data.
So again, as we step back here, this Federal Reserve, I don't know. I think they can kind of just sit on their hands. Do you think they're going to do that, or do you think they're going to?
I don't think so. I think some of these details of the labor market data, that there was a reason that they cut 50 in September. That risk that the labor market could more sharply deteriorate. Yes, we don't see layoffs yet, but if you wait to see those layoffs, it's almost too late. You want to get ahead of that. And I think fundamentally, as long as the labor market is loosening, and it has loosened, over the last couple months again, they're going to think rates are restrictive, and they don't need to be, and so you can continue lowering rates.
I look at the kind of quantity and size of the revisions that we've gotten, and I'm just wondering sort of how you look at that and process that, if it seems out of mode, and sort of pulling back from that, sort of what the trend tells us beyond sort of the kind of month to month that we've been focusing on.
Right. It is really important to form your view based on many different data points over many different months, and that's what we're trying to do, and that's the sense in which, we did have 2 stronger months of employment data where the unemployment rate went sideways at 4.1%, but it looks increasingly like that is the outlier, I think, and survey data are still pretty unfavorable. All of the revisions that we know are going to come to the payrolls numbers, it does look like a weakening labor market.
Veronica, thank you so much for joining us. We appreciate it. As always, Veronica Clark, U.S. economist for Citi, the pride of the University of North Carolina at Chapel Hill. Bloomberg
We'll leave it
Surveillance
there, Paul. I won't pull any more UNC guests on you.
Exactly. Bloomberg Surveillance is brought to you by Build America Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure, provides guaranteed income to improve any portfolio. Learn more about municipal bond credit quality. Visit bambonds.com. With our news in New York City, here's Michael Barr.
Thank you very much, Paul, David, Lisa. Russian media say ousted Syrian leader Bashar al-Assad has fled to Moscow and received asylum from his longtime ally. It comes hours after a stunning rebel advance swept into Damascus to cheers and ended the Assad family's 50 years of iron rule. Meanwhile, recent U.S. airstrikes in Syria came following Assad's swift removal on concerns that ISIS groups in the area may try to take advantage of the situation. Defense Secretary Austin told reporters today that Sunday's airstrikes on ISIS camps in central Syria were aimed at preventing just that.
We're still evaluating the results, but I think that we're going to find that we've been pretty successful. But that's focused on ISIS, to keep the pressure on ISIS and to deny them the ability to easily research.
Secretary Austin made his comments while traveling in Japan today. President-elect Trump promised to end birthright citizenship through executive action, even though the 14th Amendment guarantees citizenship to people born in the U.S. territory.
If somebody sets a foot, just a foot, 1 foot, you don't need to, on our land, congratulations, you are now a citizen of the United States of America. Yes, we're going to end that because it's ridiculous.
It was one of many comments Trump made to NBC's Meet the Press, heard Sundays on Bloomberg. Finally, it's the end of an era for the Eras Tour fans.
I'm so depressed, I act like it's my birthday.
Taylor Swift closes out another wildly successful string of performances for her Swifties. The tour winding down in Vancouver after more than 150 shows in sold-out stadiums performed on 5 continents. The tour started in March of 2023 in Glendale, Arizona, becoming the highest-grossing tour of all time, pulling in an estimated $2.2 billion. And her concerts, which attracted an estimated 11 million fans, with the Federal Reserve even crediting the megastar with boosting the U.S. economy. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate it. All right, I watch Yellowstone, so I feel like I'm an industry expert on the ranching industry. Here's a story I don't get. U.S. beef industry slump is about to get worse. The U.S. beef industry is facing a severe shortage of cattle, which is expected to worsen before the next election cycle. The shortage is due to years of depressed prices, severe droughts, and surging costs, which have forced farmers to send more females to slaughter, reducing the herd size. I'd never thought about that before.
Are you a steak eater?
I am a steak eater.
I am shocked at how much steak costs whenever I go
Oh,
out.
yeah.
I'm always like, treat myself.
I didn't.
Whoa.
Yeah, I didn't know. I just kind of feel like if you want more cows, you have more cows.
Yeah.
But
Well,
apparently there's a huge whole chain that has to kind of work smoothly for that to happen. So some problems there. And again, for those of you out there that enjoy a good steak, costs could be going higher. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
From the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. We've got futures mixed, and this as investors focus on an upsurge in geopolitical risk, but also the outlook for interest rate cuts. Right now, we have NASDAQ futures down about 0.1%, 31 points. Dow futures little changed, up about 33. S&P futures little change, down about 1. The 2-year yield 4.11%. That's little change. The yield on the 10-year 4.17%, and that's up 1 basis point. To commodities, we have oil on the rise. We have Brent crude up more than 1%. This is after the toppling of the Syrian regime. It's at $71 a barrel. WTI crude $68 a barrel. We have spot gold up more than 1% at $2,662 an ounce. The Bloomberg Dollar Spot Index is down about 0.1%. EV stocks, those are on the rise. The China Passenger Car Association, well, it said that car sales rose sharply in the country last month. Tesla actually selling more than 78,000 vehicles. Tesla shares up more than 2%. Rivian up more than 4%. And Bloomberg reporting Oracle on track for its best year in over 2 decades. That's thanks to its cloud business. Its shares up more than 1.5%. And finally, some fun news to end with. The famous ruby slippers that were worn by Julie Garland in A Role as Dorothy in Wizard of Oz sold for $28 million at auction. That's according to the New York Times. There you go. That is a Bloomberg Business Flash. Paul and David.
I saw these on display. I forget which auction house it was, but it was I think it was on Park Avenue. There were people taking photos with them before the sale took place. So it was one of those auctions where I think everybody wanted to, there were probably a few interested parties, but plenty of people wanted to go see the famed slippers. And they were there. I saw them. You could see them through the window.
Is that right? I didn't know that. Okay, very cool. All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney, live here in our Bloomberg Interactive Brokers studio. We're streaming live on YouTube as well. Well, President-elect Donald Trump said he would use his powers on his, quote, first day in the White House to grant pardons to rioters involved in the attack on the U.S. Capitol on January 6, 2021. Quote, I'm going to be acting very quickly, Trump said in an interview with NBC's Meet the Press on Friday. Henrietta Treyz joins us, and she's at Veda Partners. She helps us kind of understand what's happening down there in the world of Washington, D.C. on the political front here. Henrietta, thanks for joining us here. How serious do you think President-elect Trump is, and what would that mean for him politically?
I think he's very serious about that, and I think it's going to be, hopefully on a case-by-case basis. Some of these folks have been in prison for 20 plus years for hurting and assaulting police officers. So those are more serious crimes. But I think right out of the gate, he's looking to deliver on some of the red meat that he promised his voters on the campaign trail. We all know that the tax bill is going to take a full year to complete. So some of the other things on immigration, deportation, freeing some January 6ers, things along those lines are what I would expect in the first 100 days of the next administration.
This was a wide-ranging interview that Kristen Welker conducted, and something she did ask about is what plans he has, if any, for Fed Chair Jerome Powell. What did you hear in that answer, and how much do you think that was something that was of concern to investors, to markets broadly, just this uncertainty about whether or not the president-elect had plans to remove or ask for the removal of Fed Chair Jay Powell?
Yeah, for the street, this was really a huge issue maybe 6 months ago. There was a lot of questions that I would always get, is Jay Powell safe? His term runs until 2026. I think that what President-elect Trump has correctly assessed is that it's not worth the political capital to go after Jay Powell, create an undue disruption from somebody who's otherwise very aggressively soothed markets and is speaking as something of a calming force. I think that investors like the separation that they're seeing more than anything else. And I think that Jay Powell has gone a long way towards saying, I will not be leaving. And President-elect Trump has to adapt to that. So the markets and sort of keeping markets calm requires that Jay Powell not be confronted in any kind of way. And President-elect Trump acknowledged that reality.
What do you believe is the to-do list on day one of the Trump administration? How do you think they're going to proceed really over that first 100 days or whatever the relevant time period is?
Yeah, I mean, I think that there are, again, some sort of red meat hanging things like pardoning some of the January 6th insurrectionists makes a lot of sense. The Senate Republican Conference is making it clear that the tax bill is going to take all year. So they're diverting to 3 other issues: military preparedness, energy, and immigration. So I'm expecting a crackdown on immigration and deportations. Folks with temporary protected status, I think, should be on pretty high alert. as we try to identify who can be identified as a immigrant that maybe should not be here permanently, and going after folks that we can at least find. So I think that is where a lot of the focus is going to be. Should we see any action on tariffs, I'm concerned that it's going to be via the International Emergency Economic Powers Act, IEPA, which is something that the president can do with an executive order at the stroke of a pen. It does not involve something as advanced as withdrawing from the phase 1 agreement with China, though that is also something that they could telegraph on day one. But under IEPA, you get a focus on immigration with Canada and Mexico, and then fentanyl with those countries as well as China. And so there you could see some movement on tariffs immediately. As you know, the Customs and Border Patrol guys can change tariff rates within 12 hours. So that could really be an immediately effective development.
I want to get your read on what this economic team looks like, how happy Wall Street should be with its composition. So a couple weeks back, we had Scott Bessent put forward as the president's pick to be the next Treasury Secretary. There was this great sigh of relief. I heard it that he's somebody that Wall Street knows and is seen sort of as a moderating figure, somebody who might push against the president-elect's worse instincts when it comes to trade policy, for instance. And then we get this appointment of Peter Navarro, noted rabble-rouser, noted China hawk. And I wonder what that tells you about what meetings are going to be like of that economic team, yes, in the cabinet room, but beyond that, sort of how loud his voice is going to be, and sort of what that potential boisterous disagreement is going to mean for the direction of economic policy in this second Trump term.
I have no expectations that Scott Bessent as Treasury Secretary is going to be a mitigating force against the tariff-minded members of the rest of the cabinet, whether that's Howard Lutnick at Commerce, whether that's Peter Navarro in a trade sort of overarching position, Kevin Hassett, who is a very well-known person on Capitol Hill and is going to be in the ear of members. You see that in Jamison Greer, who was Chief of Staff to Ambassador Lighthizer. There are folks with deep experience in D.C., and Scott Bessent is not that guy. So while Wall Street might have some comfort knowing that he has invested funds before and speaks Wall Street's language, he's not the one that is going to be the muscle in the room, either at the cabinet level or on Capitol Hill. So I'm expecting the folks who are very supportive of tariffs, including most importantly, President-elect Trump, to have a much louder voice. And you see that in legislation that's already been introduced by Chairman Molinar about the stripping China of its PNTR status. The trade focus, the tariff focus is very aggressive and well built out. The Scott Bessent camp that maybe supports a more gradual increase in tariffs of 5% every month, which is what I last heard from him, is something that I think is going to see a much diminished role as we get into the next administration.
Mass deportations, is there any feeling in Washington, D.C., how that would actually work?
Yeah, I'm having preliminary conversations with staff right now, and I think one of the big concerns is about the impact that this is going to have on primary season, on general election season, on the legislative to-do list for Congress. So as we get into next year in the first quarter, it's likely that we're going to have a conversation about a government shutdown if they fund the government through March, about the debt ceiling, which is going to be highly contentious for Republicans to deal with. And if in the backdrop of that, we have, folks, this is exactly what staff says to me, if people's grandmothers are being deported, then we have a very real problem. People point out Miami-Dade specifically as an area that's going to be a concern. A lot of Republicans now in the state of Florida, newly elected Republicans, and the gains that Trump has made there in the last 8 years. And that's really something that they're considering sort of the backdrop to the legislative agenda. And that's as they're trying to get Democratic support for keeping the government open or hiking the debt ceiling. And if there are mass deportations going on, I'm not expecting a lot of Democratic support for whatever is in the Republicans' agenda, whether it's Trump's or Majority Leader Thune's or Speaker Johnson's.
Henrietta Treyz, thank you so much for joining us. Always appreciate getting some of your perspective. Henrietta Treyz, she's a managing partner at Veda Partners, really locked in, I feel like, to the folks that actually that get stuff done down in Washington. Not necessarily the folks you see on TV, but the folks behind the scenes actually getting stuff done. That seems to be a lot of her good sourcing.
Yeah, and I think your question, Paul, a very good one, just about what day one means, what's going to happen then, something I'm going to be kind of following and tracking ahead of Inauguration Day. He's promised a lot. We'll see what he delivers or can deliver.
Yeah, I think we'll see a lot of executive orders and the very large signature.
Yes, the Sharpie will be out.
The Sharpie will be out.
Yes.
So we'll keep an eye on that. We'll have more coming up. This is Bloomberg. Good morning.
It's right, it's back, and it's what we fight, we break.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
I'm sorry, it's a boom economy, and that's what we're adjusting to.
Neither party seems to want to take on deficits at all.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news. Tensions between the U.S. and China have heated up even more. The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Dr. Ariel Cohen, Senior Fellow at the Atlantic Council, get his thoughts on the Middle East and Syria. Carol Schleif, Chief Market Strategist at BMO Private Wealth, discuss her market outlook here. And Mike Medeiros, he's going to join us in studio. He's a macro strategist for Wellington Asset Management, and how markets could react to monetary and fiscal policy in a second Trump term. So we have a lot coming up in this hour. Futures are mixed here. Bloomberg Surveillance today is brought to you by CME Group, the world's leading derivatives marketplace, offering the widest range of global benchmark products across all major asset classes. CME Group, where risk meets opportunity. Let's kick this hour off with the Bloomberg Business Flash with Lisa Mateo.
You got it. We've got futures mixed. Political turmoil in the Middle East and South Korea kind of offsetting some optimism over China's monetary policy shift. We have NASDAQ futures down about 0.1%, 37 points. Dow futures up 0.1%, 45 points. And S&P futures, little change, down about 2. The 2-year yield, 4.11%. That's little change. The yield on the 10-year, 4.17%. And that's up 2 basis points. Korean markets under pressure. Opposition lawmakers pushing for another impeachment vote on President Yoon Suk-yeol. Right now, the Kospi is down a bit more than 2.5%. We have the Korean won, that's down about 0.6%. The Chinese yuan starting to rebound. That's after China's leader signaled a more forceful policy approach to shoring up the economy. U.S. listed Chinese shares also on the rise. Alibaba up 7%, PDD up 8%, and JD.com up 9%. Checking back in with shares of NVIDIA, they're still lower, down 2% after China opened an investigation into the company for a potential breach of monopoly law. And lastly, shares of Interpublic Group, they're up about 13%. Omnicom Group agreed to buy the company. It's a stock-for-stock transaction. Omnicom down 3%. Now, that deal creates the world's largest advertising company, a combined annual revenue of over $25 billion. That is your Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio in New York City. We're streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast, and that's where you will find us. Well, the geopolitical news of the day is coming out of Syria. Bashar al-Assad has fled to Moscow after rebels advanced on Damascus. The collapse of Assad's regime has created a power vacuum, with multiple factions vying for control and raising concerns about further violence and upheaval. Let's get some latest analysis on that. Dr. Ariel Cohen joins us. He's a senior fellow the Atlantic Council Eurasia Center. Dr. Cohen, thanks so much for joining us here. I guess what is your take of what is happening in Syria and that part of the world?
This is a strategic geopolitical shift. We haven't seen anything like that, at least since the collapse of the Saddam regime. It may be even more significant than that. Why? Because, first of all, we see the return of history as opposed to the end of history, courtesy of Frank Fukuyama. The Russian-Turkish competition is back in force, and this is a trend of the last, 400 years? That also means that whether Iran is trying to get nuclear weapons or Turkey is getting into a competition with Russia, Turkey may make a move in the future to get nuclear weapons itself. Then there's a cascade. Saudi Arabia, Egypt, and of course, Israel never admits, but they have nuclear weapons as well. So that's point number one. Point number two, we have a failed state on the doorstep of Europe. Europe took already several millions of refugees from Syria. Turkey took over 2 million refugees. If Mohammed al-Jilani, the new ruler, the leader of the rebels, the former Al-Qaeda guy, is not going to get his act together, there'll be more refugees spilling out of Turkey. The Alawites, the minority that Bashar al-Assad was the leader of, and then his father and grandfather before him. The Christians, the Druze, and whoever else are there, the secular people who are not happy with the Islamist regime that most probably al-Jilani is going to impose. He is very careful. He is much more sophisticated than his mentor al-Baghdadi in Iraq or the Taliban. But my fear is, and I hope I'm wrong, that in the future, as he consolidates power, he may impose a full-fledged Islamist Sharia regime in Syria.
Dr. Cohen, let me ask you about the timing here. And we've talked a little bit this morning just about how long this war was grinding on before we saw such movement here over these last couple of weeks. And you're describing the kind of power vacuum that's opened up here. And I'm very curious sort of what you're going to be watching for. You mentioned all the different parties, both on the international scale and within the country, that are going to be trying to sort of vie for power and see what happens here, how it shakes out. How limited is the timetable here to see sort of, what's going to emerge? What are you watching for? Just give us some counsel on what these next few days are going to be like. Again, we've kind of looked at past analogies. You brought up Iraq. Libya is another one. What have they told us about how long this might take to sort of figure out where things are happening directionally?
As you can see, Libya is still unresolved more than, 15 years, almost 20 years, 06. So 18 years. Libya is still a mess, and the Libyan tribes that were united under Colonel Gaddafi did not come together. Iraq is an interesting story because the Iranian influence over the Shia community there goes so far. Yes, there's a lot of Iranian influence, but when Bashar al-Assad begged the Iraqi Shia to come to help him, they said no. I would be looking at, first of all, how the Kurds are treating. Kurds are the largest minority in the world, or the largest people in the world without their own state. 30 to 40 million in Turkey, Syria, Iraq, and Iran, still without their own state, despite the promise after World War I in the Versailles Conference by President Wilson to give them a state. Secondly, how women are treated. Are women going to be put in niqab, in full cover or not? So far, the rebels said they're not going to impose a dress code on women, but I have my doubts going further. Third, how far Turkey's writ is going to go in Syria. Yes, Turkey has its own militia further in the north that is fighting the Kurds and ethnically cleansing the Kurds and trying, I saw unconfirmed reports that kidnapping Kurdish women. But the main rebel force is from Idlib all the way south to Damascus, and then all the way to the ceasefire line with Israel. Israel is taking preventive steps to secure Syria from weapons of mass destruction. They bombed the storage of chemical weapons, surface-to-surface ballistic missiles, and other heavy weaponry, so that this threat will not come up in the future. And Israel is fully coordinated with us, with the United States. President Biden said yesterday that any threats to the neighboring countries, be it Jordan, Israel, Lebanon, etc., from the radical militias, and I deliberately don't want to call them jihadis out of goodwill, any threats will be confronted. And we're bombing today ISIS positions in Syria.
Real quick, Dr. Cohen, 30 seconds left. What role, if any, should the United States play here?
Look, the United States is desperately trying to walk away from the Middle East as long as the Iranian nuclear program is ongoing, and some say is accelerating. We cannot walk away from the Middle East. Iran now is an anti-status quo power that is threatening everybody. Turkey, the Emirates, Israel, Saudi Arabia, our oil reserves, or the world's oil reserves in the Middle East. We cannot walk away from the threat of the Iranian nuclear weapons.
Dr. Ariel Cohen, thank you so much. We appreciate it. Dr. Ariel Cohen is a senior fellow for the Atlantic Council Eurasia Center, giving us the latest analysis on the unfolding situation in Syria, which is early days and remains very fluid, and we'll have complete reporting on it going forward. With our news in New York City, here is Michael Barr.
Thank you very much, Paul, David, Lisa. As the final weeks of the Biden presidency wind down, President-elect Donald Trump is laying out his plans for the next 4 years, including everything from immigration to tariffs.
They cost Americans nothing. They made a great economy for us. They also solve another problem. If we were going to have problems having to do with wars and having to do with other things, tariffs, I have stopped wars with tariffs.
He made his comments on NBC's Meet the Press, heard Sundays on Bloomberg. Trump has also announced that his personal lawyer, Alina Habba, will serve as counselor to the president during his upcoming second term. Syria's prime minister says most cabinet ministers are still working from offices in Damascus after rebels entered the capital over the weekend and overthrew President Bashar Assad. Bloomberg's news director for Europe, the Middle East, and Africa, Roz Matheson.
It can be a very, very fluid situation. This could go on for weeks because, again, Syria has been arguably micro-controlled by a bunch of different groups for a very long time. How do you get those groups together? And then how do you form a structure of a government out of it?
Bloomberg's Roz Matheson. Officials in Palm Springs, California say they are investigating after an accident at a holiday parade over the weekend. An officer drove into a crowd of spectators after he says he lost control of his motorcycle on the parade route. The police officer plowed into the crowd at the Festival of Lights parade in Palm Springs. A dozen people were injured, including a child and the officer. Finally, a new report says Earth just experienced its second warmest November on record, second only to 2023, making it all but certain that 2024 will end as the hottest year ever measured. A report today by the European Climate Service, Copernicus, says 2024 also is expected to be the first calendar year in which the average temperature was more than 2.7 degrees Fahrenheit above pre-industrial times. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, David, Lisa.
All right, Michael Barr, thank you so much. We appreciate that. All right, David, Warner Brothers Discovery reached an early renewal of an agreement to provide Warner Brothers or networks such as TNT and CNN to Comcast, roughly 12.8 million cable TV subscriber. The deal avoids the channel blackouts that can sometimes come with fee negotiations and includes continued carriage of all the Warner Brothers networks. How about that? So, you're a big CNN fan, big TNT fan, I'm sure.
I feel like, I'm going to go on a Jeremiah here, but I've got all these streaming services. I finally bit the bullet and got YouTube TV because having cut I couldn't watch sports. I feel like I'm paying a fortune and way more than I was paying before. So great news here. Yeah. I feel like finally I'm at the place where I am getting CNN through YouTube TV, and now whatever, I'm getting the. But I feel the same thing with Hulu and Disney. I thought I got both, and I had to pay more for anyway.
See,
I could go on all morning.
They're getting you. It kind of yearns back for the time when we paid one bill for pretty much everything. If people can remember back to those days, and again. Were you paying for stuff you didn't want? Yeah, but okay, here you go. Here's a la carte. This is what an a la carte market looks like.
And somehow I'm still paying for stuff I didn't want.
Exactly. So you have to just kind of... The good news is on these streaming services, it's super easy to cancel.
Yes.
It's a click of a button.
And then they try to keep you for a nice, tidy discount.
So there you go. So we got a lot of stuff happening out there in the world of media. We got consolidation of the ad agencies as well. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this futures report sponsored by IBKR. Markets never sleep, and neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indices, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. All right, we've got a little movement in futures. Stocks extended their record-breaking run on Friday. That was following that jobs data, increased bets on a December rate cut from the Fed. Swap traders price in a roughly 80% chance of a quarter-point easing at the Fed's December meeting. We'll start with NASDAQ futures, down 0.1%. 38 points. Dow futures, little change, down 28. S&P futures, down about 3. The 2-year yield at 4.12%. That's up 1 basis point. The yield on the 10-year, 4.18%, and that's up about 2 basis points. The Bloomberg Dollar Spot Index is little change. We have Bitcoin down nearly 1% at around 99,000. Now, on a side note, MicroStrategy bought another $2.1 billion in Bitcoin. It's its 5th consecutive Monday purchase. MicroStrategy shares down about 1%. More inflation data due out this week. CPI for November on Wednesday. Producer prices on Thursday. And then we have shares of Super Microcomputer. They're up 9%. The company given more time to become compliant with NASDAQ listing rules. And finally, shares of Macy's up 4%. Activist investor Barrington Capital pushing the company for changes, including a new real estate unit. Macy's reports its results on Wednesday. Today after the close, we hear from Oracle and Toll Brothers. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Lisa Mateo. That is a Bloomberg Business Flash. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. So head over to youtube.com, search Bloomberg Podcast, and that's where you will find us. S&P 500 up about 27% year to date on an equal weighted basis, up about 17%. So you see some of the impact of some of those big tech names kind of pushing up the XPX. Where do we go from here in terms of 2025? Carol Schleif joins us, Chief Market Strategist at BMO Private Wealth. Carol, what's the message you're going out to the BMO Private Wealth clients these days is about how they should think about investment opportunities in 2025?
We really first off, thanks for having me on. And we are encouraging people to stay committed to markets because we do think there's a lot of underlying economic fundamentals that should continue and carry over to next year, irrespective of the way policy plays out. You know, coming into the election and worrying about who was going to be in the White House and on both sides of Congress, there's an awful lot of really positive things still going on in the economy. And we have a lot of independent spend, which should now actually even be accelerated a bit going into next year. So keeping that balanced portfolio in play, but definitely leaning into the growth and liking domestic stocks all up and down the capitalization range.
Carol, I want to pick up on something that you said to our colleagues, Katie Greifeld and Matt Miller, a couple days ago. You are an open interest, so I'll do some cross-platform, cross-promotion here. But you talked about kind of the uniqueness of this bull market, the way that we started out so narrow and we're seeing it broad, and that's customarily not the case. And I think that they were short of time, and I was very eager to hear more from you on that, sort of what that tells us about it directionally, where it might be headed, sort of what historical analogs we might have for how markets perform if we see that kind of, I don't know if it's inverse or converse, sort of not playing out the way that it customarily does.
Right. Well, and it is definitely inverse because traditionally you'll start a bull market coming out of a recession when everything moves because people are relieved you've had a washout period and you get big, broad movement in the market. And then as that bull market extends itself, leadership tends to get narrower and narrower. This time around, we started that bull market, if you will, basically off of the back of dual bear markets in 2022. And we started it very narrow with the focus on technology spend, the Magnificent Seven in particular, but on that build out of things going on there and the significant spend that those companies are doing. Now what we've seen, especially in optimism post-election, when you've got more clarity coming out, because at least we'll have policy changes that will be probably pretty prescriptive early on in the process. Markets can react to that, but you've got an awful lot of spending in the pipeline, and not just on the AI data centers, you've got companies that have been toying with those AI use cases for over a decade. You've got significant spend going on to need to bring the grid up to speed. So you've got a broadening in the markets and a broadening in capitalization too. We've seen, especially post-election, that those mid caps and small caps are participating more actively in markets. And that's positive for the sustainability of this uptrend.
So, Carol, it appears that just from a rhetoric perspective, this new administration coming in from an economic perspective, talking tough on tariffs here. Are there winners and losers in a world where tariffs may be a frontline economic tool?
There definitely are, and we'll have to watch that policy progress very carefully, because incoming President Trump does have the ability to unilaterally deploy some of those tariffs. Early on, we suspect a lot of these are opening negotiating positions. You've already seen it with our trading partners, Canada and Mexico, where social media posts talking about 25% tariffs, and both of those leaders are on the phone and responding or meeting in person. And so the negotiating tactic there, it will really depend on watching how these companies deploy them too, because tariffs are a tax on the company, the person or the entity bringing those goods into the US, and we'll have to see how those companies decide can they pass them on? Can they not pass them on? And so there'll be a lot of issues there. But you've also got it as an opening knell for a lot of different countries in terms of President Trump and the incoming administration has repeated over and over that their ultimate goal is to strengthen the manufacturing base in the United States and strengthen the activity here and create an environment that's conducive to business. And to the extent that they're able to navigate deftly those tariffs, we'll have to watch it carefully, because there will be individual winners and losers. There will be sector winners and losers. Who knows, it might be the year in 2025 that active management really shines.
And we saw the speed with which Justin Trudeau got on that plane from Toronto down to
Yes.
Florida
Right.
when all of that happened. Carol, let me ask, we had Callie Cox here a little while ago, and she was talking about sort of the unloved or underloved parts of this market once you open up the hood. I'll have you do the same thing. When you pull up the hood, what do you think there are in terms of opportunities here going forward that might be sort of less loved or less tended to in the market?
Well, I think less noticed in the media is a lot of the industrial companies. They're not necessarily less loved, because when you look at some of the charts on those individual industrial companies, you take an ETF like PAVE and look at the component companies in there. There's some charts in there that look an awful lot like NVIDIA charts. So, but they're not necessarily as well known more broadly. But you've also got some financial services companies that should benefit under a lighter regulatory touch and perhaps more ability to be able to do mergers and acquisitions and lending, and with rates coming down. There's also some spots in the medical services industry that have been beaten up in here, and we'll have to see under a new regime who benefits, who doesn't, in terms of who gets the, who musters through Senate confirmation for the various posts out there. But it'll be definitely an interesting market worth participating in the coming year. But we still like areas of technology as well. Aside from the Magnificent Seven, there's a lot of interesting things going on in that technology space.
Real quickly, 30 seconds left. Energy, because I'm not sure if drill baby drill is good or bad for the energy sector.
It's interesting because we don't need more production, and I'm not sure that the big oil companies are necessarily going to do that, but President Trump has stated repeatedly that he wants to re-up some of those pipelines. So there again, it'll be worth active management poking through the energy industry and seeing who participates and who doesn't. And actually some of the clean energy alternative energies, nuclear is going to be an interesting place to watch too.
Carol, thank you so much for joining us. Carol Schleif, Chief Market Strategist for BMO Private Wealth, BMO Bank of Montreal. Looking at oil here, it's up about 1.5% here today, but still just above $68 per barrel. I think if you talk to most folks, in the oil patch, and again, I watch Landman, so I know all about this business.
That has made you an expert.
The range they feel comfortable is $60 to $90 per barrel. I think their cost of production is like $50 or something like that. So they're making money here, but they make a little bit more money at higher prices.
And we haven't talked about OPEC Plus, but I guess they continued their production cuts going forward. They're going to see what shakes out with all this going forward.
But, with the U.S. being a net exporter here, it looks like 13 million barrels a day here. I just wonder how important OPEC Plus is. But the experts tell me you got to still focus on OPEC Plus because they are a big source of supply. We'll have more coming up. This is Bloomberg. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And this opening bell report is brought to you by JP Morgan Asset Management. Stay informed on today's fastest growing investment vehicle with a new guide to ETFs. Visit jpmorgan.com/ETF insights to learn more. All right, how are these markets going to react? We have political turmoil in the Middle East, South Korea, along with optimism over China's monetary policy shift. This morning, futures have been all over the map right now. We'll get things started with the S&P 500. Down about 0.1%, 8 points at 6,081. We have the Dow, little changed, up about 18 points at 44,663. And the NASDAQ down about 0.2%, 45 points at 19,816. The 2-year yield at 4.11%. That's little change. The yield on the 10-year 4.17%, and that's up about 1 basis point. We have the Bloomberg Dollar Spot Index is little change. We have Bitcoin down about 1% at around 99,000, and oil rising after the toppling of President Bashar al-Assad's regime. Right now we have Brent crude up more than 1% at $72 a barrel. WTI crude at $68 a barrel. That is your Bloomberg opening bell report. Paul and David.
All right, Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene this morning. We have no idea where Tom Keene is, so if anybody has a sighting...
He likes it that way.
Yeah, exactly.
Think,
Central Park or
mystery.
some brasserie somewhere. Let us know. We're here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. I'm guessing, we got a new sheriff in town starting next month in the White House. We've got a Republican-controlled Congress here, very slight margins, but still, you could call it a red wave if you want. I suspect that macro strategists, people who think about stocks, bonds, commodities around the world, they're thinking we maybe need to rethink maybe our outlook here over the next several years. Mike Medeiros joins us. He's a macro strategist for Wellington. They're up in Boston, but he's down in the world's financial capital, New York City. Joins us here in our exactly. In the world of ETFs, I don't know what happens to you guys. Mike, thanks for joining us here. When you guys kind of saw the new administration coming in and maybe how Congress was forming, did it change the way you guys thought about markets globally or just strategically?
So what we tend to do is we look at the starting point for the economy going into an election and whether that election will accelerate various structural and cyclical themes, decelerate, or represent no change. And so to us all along, the Republican sweep scenario really represented, an acceleration in a lot of these themes that are underway. So what are those themes? Number one is on trade protectionism. Protectionism really started in 2009, accelerated under Trump's first term, didn't really change under Biden's term, right? Trump's proposal is now very significant use of tariffs. We can debate when and how much, et cetera, but bottom line, I think that's an acceleration. Second is on demographics and labor supply. So, the world is short of labor, particularly the United States. There's two ways to correct for that. Higher participation, which is more or less maxed out right now, or higher immigration. Immigration's already slowing going into the election, and, regardless of the timing impact, et cetera, do think we're going to see a much slower labor force next year. So all else equal, those are very significant impacts on the supply side of the economy, which is constrained. The third piece is fiscal, right? No surprise the U.S. faces, rising debt levels, ongoing fiscal deficits. You look at Trump's fiscal plans in aggregate, all else equal, if he gets what he wants, increase in fiscal deficits. And so those three things, I think, to your question, accelerate things that were already underway in the economy.
Let's talk about each of those in kind, and we'll get to the dissonance of the last one maybe last. But starting with tariffs, now you kind of follow what's going on in the U.S. and Canada as well.
Yep.
We're at this point now where we and global leaders are just trying to figure out what's bluster and bombast and what are actual policy proposals. Are there negotiating gambits or more than that? When it comes to those tariffs in particular, what the president-elect has threatened on Canada, how real is that? We were joking about how quickly Justin Trudeau got on the plane to get to Florida after that happened. But what does that tell you about what those mechanisms mean, what they are actually, and how they're going to play out?
Well, I think the fact that, we're talking about tariffs towards Canada, which is, the U.S.'s largest trading partner, there's information in that, right? And the fact that Trump started by talking about tariffs towards Mexico and Canada after renegotiating the USMCA does suggest he's serious about implementing tariffs. Now, it is an on-off button. He can use Section 232, 331, IEPA, and so there are some processes, but he can change that. I would be very surprised if there was an across-the-board tariff for the first year, but I do expect to see an increase in tariffs, particularly towards China, right? If you look at his first two Truth Social statements post-election as it relates to trade, first one, Canada, Mexico, China. Second one, BRICS. Yep. What's in the middle of that? China. And, you can see through his cabinet picks, Peter Navarro will be in the White House now. Marco Rubio, very significant China hawk. And that Venn diagram, it seems like China's the main focus.
David Perdue going to China as well, the former senator, China hawk.
Okay.
Yeah, as an ambassador.
Very good.
Right.
So what does that mean for a macro strategist? Do you dial up your risk here, dial it back, focus more on U.S., outside of U.S.? How do you think about it?
So what we try to do is look for alignment between these medium-term themes, which we're talking about, but certainly take a while to manifest in the business cycle versus the near term, right? The next 3 to 6 months or so. We still have a misalignment because when I look at all of the pieces we talked about around immigration, trade, fiscal, right, that all points to higher medium-term inflation. But you need the catalyst on the business cycle. And the labor market's still slowing. We got some evidence of that on Friday with the rise in the unemployment rate. And so until you get that alignment, I think there are some signs we could get that in the first half of the year. That's typically when markets tend to trend. Bond markets, that is. For now, the market's been priced for a soft landing. That's been completely justified in the data. We're looking for what could disrupt that over the next 6 to 12 months. I think some of these developments on the supply side, if they're sustained, could do that. But for right now, markets rightfully so are focused much more on the prospects of deregulation next year, which will be very significant, does not need Congress, and tax code certainty, right? We can debate whether the corporate tax rate's going to come down, but we do know for the next 4 years, it's all else equal going to be the same.
You've lived through a few of these presidential cycles, and so just as we're talking, it's an ambitious set of policy proposals, be that on tariffs and trade, on immigration, on the deficit, on taxation. How do you see all of that shaking out and kind of getting prioritized? So we had the president-elect in an interview this weekend talking about day one and all the executive orders he's going to do. We were talking with Henrietta Treyz of Veda Partners earlier. She talked about sort of how long this tax process is going to take, even with the control of the House that Republicans have. When it comes to what you're watching for first and second, how are you seeing things shake out?
Yeah, it's a really good point because the sequencing is very important for next year, right? I don't think there's a ton of focus on the sequencing aspect of that. Right now, it's all not going to focus on trade, not going to focus on immigration, just the good stuff. Now, if you break down the 4 policy proposals, 3 of those 4 do not require Congress. Deregulation, day one. Immigration, day one. Trade proposals, day one. Taxes, that does require Congress in the reconciliation process. And so that will probably take longer, meaning mid-year at best, more likely towards December. And so you could see some of the negative growth policies hit first, meaning the impact of less immigration and the impact of tariffs before you see some of the maximum impact of things like tax cuts. And so I do think that sequencing will matter next year.
Does the bond market care about all these deficits? I mean, I'm asking for a friend here. I don't know.
So it's a good question. If you look at the fiscal deficit, if you look at inflation volatility, all those point to a significant rise in term premium over the next 12 to 24 months. And we do think term premium is underpriced in the bond market on a structural basis. Now, the U.S. has some advantages. Number one, it's the reserve currency, right? There have been 6 reserve currencies since the mid-15th century. They've all lasted for about 80 years, and it takes either a war, a massive increase in debt, or significant debasement.
What was it before the dollar? Was it sterling?
Sterling.
Okay.
Yep. So Portugal was first.
Please.
Yeah. Come on, I'm half Portuguese.
No kidding. I take it back then.
No, I'm messing with you. But the U.S. does have some very significant advantages, in particular the Fed's balance sheet at 28% of GDP. And so that's working to restrain the level of yield and term premium, relative to the fiscal deficit. And so when markets typically tend to care a lot about the fiscal backdrop, particularly in the U.S. as the reserve currency, is when you start to see inflation start to rise. Inflation's been on a decelerating trend, not back to target, the Fed's target, not sustainably either, but it's been decelerating. So why care about fiscal? Now, next year, when you add everything up, there does seem like there's a higher probability inflation surprises on the upside. There does seem like there's a higher probability that the Fed's going to have a harder job getting it down to 2%. That might be the backdrop where term premium does start to rise.
We've had a parade of people come through here who are academic economists or folks who've worked at the Federal Reserve, and they talk a lot about the importance of Federal Reserve independence. Mm-hmm. I'm very curious about how you, from a market's perspective, view that conversation, listen to that conversation. And again, we heard from the president-elect this weekend saying he doesn't have any plans to ask Jay Powell to step aside or remove him. Mm-hmm. How important a subject of conversation is that for market participants at this point? Is it a sideshow? Is it something that fixed income investors are actually quite worried about? How is that shaking out, reverberating to the extent that it is?
It's going on in the background as a conversation for sure. It's not factor one, right? And part of the reason why it's not factor one is because Chair Powell has been very adamant about the Fed's independence, that he would not step down, et cetera. That was a very strong signal that the Fed understands the institutional integrity of Fed independence, right? It may seem like a long time ago where that was an issue, but it actually really wasn't 40 years ago when Fed independence was a problem. Now, if the market was getting concerned around Fed independence, what would you expect to see? A very significant steepening in the yield curve, not really happening. A very significant depreciation in the dollar, the opposite's happening. And so markets certainly are not pricing in any notion that the Fed's going to become less independent. Is that a risk that's grown in probability over the last month or so? Absolutely, right? When President Trump was at the Chicago Economic Club, he talked about the White House having a say in interest rate policy, monetary policy, et cetera. Scott Bessent, Treasury Secretary nominee, has talked about a shadow FOMC.
Do you want that?
board.
Does the market want a shadow Fed?
Definitely not.
No.
Definitely one statement and one
almost as unequivocal as the no from Fed Chair Powell.
Exactly. Hey, Mike, thanks for joining us. Mike Medeiros, he's a macro strategist, Wellington, and joining us here in our Bloomberg Interactive Broker Studio. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. David, Lisa, rebels seized control of the Syrian government over the weekend, toppling a dictatorship that had been responsible for brutal crimes against its people. Syrian President Bashar al-Assad has fled to Moscow after rebels advanced on Damascus, marking the end of his family's 50-year rule in Syria. National Security Advisor Jake Sullivan says that the U.S. was not involved in any way.
We have been part of a broader effort in the region and around the world to weaken Assad's backers. Russia is weaker, Iran is weaker, Hezbollah is weaker, and part of the reason that Assad has fallen is because of actions that President Biden has taken both in the region and with respect to supporting Ukraine.
National Security Advisor Jake Sullivan spoke to CBS Mornings. Over the weekend, President-elect Donald Trump touched on a wide range of topics in his first network interview since the election. On NBC's Meet the Press, heard Sundays on Bloomberg, Trump called for pardoning the January 6th rioters.
I'm going to look at everything. We're going to look at individual cases, yeah.
Okay.
But I'm going to be acting very quickly.
Trump also called for all undocumented immigrants to be deported. Finally, Yankees fans are saying, say it's not Soto. See, the guy's name is Soto. And anyway, several media outlets report that star outfielder Juan Soto is trading his Yankees uniform for the New York Mets. Soto agreed to take the subway ride after reportedly signing a record $765 million 15-year contract for the Amazings. MLB analyst Jim Bowden spoke to CBS.
I think what Steve Cohen, the owner of the Mets, just showed the world is I'll pay whatever it takes to win. I will absolutely outbid all of you at a level that you will not compete.
Soto's deal is the largest and longest in Major League Baseball history, topping Shohei Ohtani's $700 million 10-year contract with the Los Angeles Dodgers. Seems like pittance now. Global news, 24 hours a day. And whenever you want it with Bloomberg News Now, I'm Michael Barr. This is Bloomberg. David, Paul, and Lisa.
You think he could have gotten more?
No.
He held out?
No, this is me, Max. He did just fine. Mr. Boris did just fine. But it continues to go higher. And what drives salaries higher, by and large, across all professional sports is media rights fees. And if you see what's happening for these local sports like baseball, hockey, and basketball, the regional sport networks are dying. So I don't know. So if you don't have a owner that's got the pockets,
then the Mets have.
You do. The Yankees, they rely on their sports network. Yes, that's feeling the same pressure as is some others. So again, I think for some of these regional sports, if you're not a super duper rich owner, you're going to be at a real disadvantage here because you can't rely upon the economics of your regional sport networks. We'll see how it plays out. Good news for Mr. Soto. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
In the Bloomberg Interactive Broker Studio, I'm Lisa Mateo. Well, that stock rally losing some steam. Traders are awaiting key inflation data. That's going to help shape the outlook for interest rate cuts from the Fed. Right now we have the NASDAQ down about 3 points. The Dow up about 2. We have the S&P 500 down about 7. The two-year yield, 4.12%. That's up 1 basis point. The yield on the 10-year, 4.18%, and that's up about 2 basis points. The Bloomberg Dollar Spot Index, that's little change right now. We have Brent crude at $72 a barrel, up nearly 1.5%. WTI crude at $68 a barrel. Want to point out Bitcoin, it's down about 0.2% at just over 99,000. Shares of NVIDIA, they're down about 2%. And we have shares of Warner Brothers Discovery up about 5%. And that's after it reached a new deal with Comcast to carry its TV channels. We have Comcast down about 1%. And finally, this from McKinsey & Company. Women expected to control $34 trillion of investable assets in the U.S. by 2030. That is close to double last year's total. The biggest reason, well, women actually in the baby boomer generation outlive men by 5 years on average. So rich husbands leaving their wives in control of the family fortunes. And that's how it's happening. A lot going on.
5 years?
5 years.
What are you guys doing right that we're not doing?
We're doing everything right. We're taking care of ourselves. That is your Bloomberg Business Flash. Paul and Dave.
Doing all those exercises and granola all over the place. I'm gonna outlive all of you. That's not the way it's. I'm just telling you right now. Lisa Mateo, thank you so much. We appreciate that. David Gura sitting in for Tom Keene here this morning. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. All right, almost 2 years ago, I bought the Jersey Shore compound. My mortgage rate at the time was 6%. I felt like such a schlub for paying when everybody else has like 2, 3, 4% mortgage rates. Now it's 6.69% on a 30-year fix. I don't feel that bad. No. But boy, rates are higher for longer here in the mortgage market, and you're seeing that in the residential real estate market. Nobody wants to sell their home and move in somewhere else where you have to trade in a 3 or 4% mortgage for a 6 or 7% mortgage. Selma Hepp joins us. She's the chief economist for CoreLogic. She thinks about this stuff. Selma, talk to us about the residential real estate market here. Mortgage rates higher for longer. That's not good for if you're a real estate agent, is it?
Well, no, no, it's not. Yeah, and indeed, we are looking at mortgage rates being higher for longer due to two very important components of mortgage rate, where mortgage rates are. One is the 10-year bond, and the other is the mortgage rate spread. And neither one is looking to improve over the course of next year. So we're looking at over 6% handle for the most of the 2025 and going into 2026. I think most forecasts at this point have mortgage rates going into about 6.5 by spring home buying season, and then only declining very slowly to 6.3 by the end of next year. So certainly much higher environment than we've seen. But one thing to keep in mind, actually, when you think about long-term mortgage rates, is that it wasn't until Fed started purchasing, doing quantitative easing back in 2009, that mortgage rates fell below 5%. Before that, we really never had a 5% mortgage rate. So we are just returning back to the normal in terms of having mortgage rates between 6 and 7%. And I think that is the new normal going forward.
What does history tell us about that return to normalization? What that process is like, how long it takes, and it's not hard to find somebody who will opine at length about how high rates used to be and how this is still low comparatively. What is that process customarily like?
Well, the interesting thing about mortgage rates is that they've been actually falling ever since the spike in 1980s, when that story was about double-digit mortgage rates. Mortgage rates have been falling for the entire period since then, all the way up until the pandemic. And this is now the first time that we've seen such a rapid and a large increase in mortgage rates ever. So we're really dealing with this for the first time in this way, where so many people refied in super low mortgage rates, and now we have this significant lock-in effect that's holding a lot of people back. But the other thing that's interesting, though, is that we have seen improvements in inventory. And when you think about going into spring home buying season next year, we do have a lot more inventory, and consumers are increasingly aware of the fact that mortgage rates are not going to dip below 6%, and they're becoming more accustomed, they're more accepting of it. And so, and the fact that you're seeing more discounting going on from sellers as well, who are also growing more accustomed to the current housing market, I think there is going to be more opportunities in spring home buying season.
It's interesting because, I think a lot of folks really felt like we'd have a 5 handle on this U.S. 30-year mortgage by now, and certainly by the first half of next year. But, obviously, as you were just mentioning, it's going to stay higher for longer. Again, is there a sense of what a clearing rate would be for the average seller to say, all right, I'm throwing in the towel here, I'll put my house on the market?
Well, I mean, we have seen definitely an increase in number of home sellers on the market this year, right? We did tend to see a little bit more as mortgage rates got closer to 6%. Surveys over the last couple of years have showed that 5.5 is that magic rate. But even if we don't get to that 5.5 rate, mortgage rate, think about 40% of homeowners that don't have a mortgage, that own their home free and clear. And then there are other things that people are now contending with that are leading to more inventory on the market. The variable cost of mortgages, such as insurance and property taxes. And in the states where you've seen largest increases in those two, that's where we are now seeing more inventory. So it's not just about mortgage rates. There are other things going on in the market that are leading to more inventory. And again, more inventory opens up more opportunities.
We spent a good chunk of the morning talking about the president-elect's trade policies, and I wonder how you're thinking about that as well. I mean, I think about that U.S.-Canada trade relationship. Timber comes to mind, just construction materials generally. How big a worry is that for you, sort of what the effect of some of these policies might be on new home construction?
Yeah, we're worried about tariffs, and we're worried about deportation because both of them add to construction costs. In terms of rates themselves, construction loans are really priced off of short-term rates. So it's about what the Fed does, not necessarily what mortgage rates do. But what the builders are currently worried about is that new inventory that's coming online from existing market. And so because in the markets where we've seen a lot of new construction, Southeast, between Texas and Florida, Florida, that's where you also see a large increase in existing inventory. So now they're seeing more competition. And so I worry that in those markets, it's not just about now labor costs or material costs, it's also these additional inventories. And so they may pull back on new construction. Hopefully that means more new construction in markets that have lagged in terms of new construction. We need desperately more new construction in Northeast markets, Western markets too. So hopefully there is some repositioning of new construction activity because of these components.
Selma, you mentioned kind of, some hot markets in Texas, Florida, places like that. A lot of folks were relocating to the Sun Belt. Are we seeing any pullback in those markets yet? Is it still hot, so to speak, from a home price perspective in those markets?
Well, actually, those are the weakest markets at the moment. The markets where we are seeing price declines are mostly Texas markets and Florida, particularly Gulf Coast of Florida. So, there are a couple other markets in Northwest, for example, where we are seeing continued weakness. Idaho and Utah, for example, that they've really spiked up during the pandemic. But that's almost an old story. Over the last year, where we see the most weakness develop is in Southeast, in Texas and Florida in particular.
All right, Selma, thank you so much for joining us. Selma Hepp, she is chief economist for CoreLogic. Again, 30-year fixed mortgage, 6.69%. That's, as someone was saying, by historical levels, that's normal. It's not a little bit below normal.
You're feeling better.
Yeah, but it's just, I think people are now starting to get the realization, this is kind of it.
It's where we are.
This is the new normal here. If I'm lucky, I get a 5 handle, but this is kind of the new normal. If I want to move, now's the time. Or there's probably I'm not going to get paid to wait anymore.
There you go. Yeah, and as you said, I think there were a lot of people who thought with that first cut, that 50 basis point cut, things were going to really change, and although they did not.
Yeah, the market's not. It's just not telling you. The market goes higher, but don't you scream to these bond market traders, "Hey, the Fed's cutting interest rates. What are you doing?"
Right, exactly.
But I guess it doesn't work that way. That's why I was not in the bond market during my career. I'd sell you a bond, but I'm not. I'm not going to invest in these things. I was an equity person. Looking at the markets here, a little bit of red on the screen, a little bit of green on the screen. Not a lot of movement. Presumably, Tom Keene will be back.
I'm here if you need me.
All right, we'll see how the Gulf Stream's working, if we can get him back here to friendlier climes. That's it for Bloomberg Surveillance. Bloomberg Intelligence coming up in just moments. This is Bloomberg.